there's not really a set way to refund these tariffs, given how big the amount of money is.
Our thought is that the tariff regime will continue.
At some point, all these tariff discussions will be settled.
The court might change the process. Tariffs are here to stay.
Tariffs are an important tool that are not going away.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome to Bloomberg Surveillance as we all sled to work here in the Northeast. U.S. futures and the dollar dipping following Friday's Supreme Court ruling on tariffs. Asian markets getting a boost. Investors seeing China and India as the biggest beneficiaries, and a big week ahead led by President Trump's State of the Union speech tomorrow. Expect a lot on tariffs and the Supreme Court, as well as NVIDIA earnings on Wednesday. The focus this morning very much on tariffs, as maybe, Annmarie, peak uncertainty is still getting with us.
There's a lot of uncertainty right now when it comes to the trade policy out of the United States. Even we saw that over the weekend. It went from 10% using a different authority, given the fact the Supreme Court struck down IEEPA, to then 15%. And this is only being used for 150 days. And we need to wait for the administration to come out with what is going to be the next avenue to legally justify these tariffs. In the meantime, everyone's asking questions about refunds, and you have things like, entities like the European Union saying, well, for now, we're going to take a pause because we need more clarity.
Right. So there's the uncertainty what it means in terms of who gets refunds and when. This, the Chamber of Commerce actually put out an FAQ for small businesses and what they can do. I read through it. I didn't have that much more clarity afterwards.
Hire lawyers.
Yeah, exactly. Meanwhile, the European Union is set to halt their trade deal, as you were mentioning, based on just the uncertainty that is abounding. What's next, given the fact that we went from 10 to 15% in 24 hours?
Well, I think it depends if you are a country that is negotiating with the United States, or if you are a small business or, say, a big business like Costco, and you've already lined up at the U.S. Trade Court for those refunds. It is going to be an incredibly long rest of the year when it comes to companies figuring out whether or not they get refunds for last year. At the same time, while that's playing out, the administration is going to be working on investigations using a 232 or a 301 to have the legal authority to upstand the tariff rates that they deem necessary.
And meanwhile, it sets up sort of an awkward paradigm for the State of the Union, which was supposed to be about affordability, about the idea of bringing costs down for families. Suddenly, the focus is very much going to be on trying to rally people around tariffs as a tool, and possibly getting really angry at the Supreme Court.
Right. And the president will be addressing Supreme Court justices, likely, who usually show up to the State of the Union. He was asked about this when he briefed the press Friday afternoon. Also very rare. The president came out Friday afternoon briefing the press after the Supreme Court decision, not just putting out a statement. And he basically was like, I could barely care if they show up. But when it comes to affordability, there was a brand new Ipsos poll with the Washington Post and ABC News. More Americans disapprove, 64%, than approve of the president's tariffs. And now he's doubling down on them.
Well, we'll get into that. Right now, it seems like people are assessing this and seeing a bit of a risk-off feel in U.S. markets, down about 0.25% for S&P futures. You are seeing a pop, though, in China in particular. Meanwhile, dollar weakness, not significant, but still the euro at 117.98. And 10-year yields a little bit lower as people assess what Walmart's earnings mean when we get Home Depot and Lowe's and some of the other consumer-led companies reporting later. Coming up this hour, Peter Tchir of Academy Securities. As a new wave of uncertainty washes over markets, former White House trade advisor Kalutkiewicz on the Supreme Court's ruling and what this means for the future of tariffs. And China Beige Book CEO Leland arguing that China is at the heart of the IEEPA fallout. We begin this hour with stocks edging lower, with concerns growing over future U.S. trade policy. Peter Tchir of Academy Securities writing, a strong ruling supporting the IEEPA tariffs may have posed more danger to markets as it could have unleashed another Liberation Day. Peter joins us now. Peter, thank you so much for being with us on this very snowy Northeast day. I'm just wondering, why do you see this as potentially being another Liberation Day?
Well, I was kind of hopeful that it wouldn't be, right? We got the ruling, markets actually responded well, then we saw 10%, and then we saw 15%. So far, you've done the show without mentioning the word embargo. I had the strange feeling that's going to come up. So I think we're going to see pressure on the markets. I think markets would have been relieved to get past the tariff issue, and it seems like it's going to be front and center again.
How much is this going to essentially crimp affordability in terms of the debate, certainly in Washington, D.C., in terms of consumer spending, if tariffs are sort of going up and down and they don't get the refund, versus the opposite? versus actually being a reprieve. I was looking at, for example, the Yale Budget Lab, and they were talking about how tariffs went down from 16% to 9% immediately after the IEEPA ruling.
Yeah, and now they're back up. I think there's just going to be confusion. I'm not sure how it's going to directly translate into the affordability issue. A lot of products have already been ordered. Some have been paid for. I think this just is confusion. I think we're going to see what happens with Iran in terms of oil prices. That could be an issue. Again, I felt we were in general in a good direction where we are headed in inflation and affordability. Friday's, PCE numbers do not support that, but I am comfortable that inflation is kind of, the last story that we need to be focusing on. We need to be focusing on jobs and economic growth.
Well, Peter, when it comes to the tariff policy, I'm thinking of China because immediately the 10% fentanyl tariff gets wiped off. Does this mean that China is a better position as Trump prepares to go there in early April?
I think there's a long time between now and April, right? Again, the ruling did seem to suggest that he could use embargo. He has not yet said he would do an embargo. Given that he likes maximum pressure, I expect a lot more noise as he tries to put the clamp back down on China. So that's why I'm a little bit nervous about markets, right? This 10% or 15%, it's not done.
You mentioned embargo twice. How would that actually look like in reality?
I have no idea, but I don't think it stops this, right? It's like you kind of go back, right? We have no idea how people are actually going to get their tariff rebate claims paid, how that's going to work. So this is a lot of stuff that's happening kind of on the fly, very loosey-goosey, for lack of a better description, and a lot's going to be challenged still in the courts, but it seems that he was given some leeway to do something on embargoes. That seems, again, a bit weird that you can't impose tariffs, but you can impose embargoes. So look for this administration to do things, I think, to re-put the clamp on China and maybe even on India. So I think that will be bad for markets.
It also raises a question about some of the Iranian talks that are ongoing, and we are going to be speaking with Roule coming up, former intelligence officer. How much do you expect some of the geopolitical conflicts or potential conflicts to heat up even further as there is an effort to gain leverage?
Yeah, I expect Iran we'll maintain this kind of maximum pressure. I think we don't see an attack for at least another week or so. We still are building up the resources. And even if we do attack, it'll probably be small just to really keep Iran forcing, at the table and really negotiating in good faith. I think Mexico becomes very, very interesting. We had talked about Mexico becoming maybe a platform where during Q1 or Q2, Trump works with Sheinbaum to rid the cartels from Mexico. I think that we have a potential for an opening there. It could get a bit scary. It's obviously very nasty and over in the country right now, and it's horrible for tourists. But this could be the first step to actually finally eradicating the cartels in Mexico.
I got to say, Peter, my head's spinning this morning. It seems like we're playing whack-a-mole with a number of different issues. On one hand, you have the trade kerfuffle and what's going to happen with respect to tariffs, what's going to happen with negotiations. On the other hand, you've got the geopolitical overhang of Iran, as well as in Mexico. And then, of course, you've got NVIDIA reporting earnings at a time where I'm doom scrolling through my Twitter feed, through my X feed, about how this is going to eradicate all white-collar work. I mean, how much are you expecting NVIDIA to essentially suck all the oxygen out of the room on Wednesday, even amid all of the tariff uncertainty?
I think we're going to look for strong earnings. They've delivered time and time again. Are we at the point, though, is that going to be enough? Are strong earnings enough? What happens to sales and chip sales in the Middle East? Does that slow down? Does that grow? What's going on with sales to China? I know NVIDIA itself doesn't count any sales towards China, but I think the market's been pricing that in. So I think a lot of these things are back up in the air. So I expect some caution. I think the market's going to tread, down a little bit. And, we could add Bitcoin in, right? Bitcoin seems closer and closer to getting these acts passed, and yet every day you look, it's down further. So I think it's kind of a messy market. I think you're supposed to stick to, what's been working and expect this rotation trade into, physical asset type companies that maybe have lower margins that benefit from AI. That's where I'm comfortable. And I think you want to own the rest of the world again, overweight versus US, especially with what just happened. Though right now I'd probably sell China on this pop because I think there's more nastiness to come there.
How much do you expect the dollar weakening trend to really reassert itself? I mean, we see just a touch this morning. It's nothing to really write home about. But going forward, how much do you expect the short positions that are building to be right?
I think they're going to see some of that come back into play, right? Again, we've moved pretty far. We had some, reestablishment, and bouncing. But yeah, I think longer term dollar weakness is there. And again, is this going to question some of the investment that was supposedly or allegedly going to come into this country? It's all up in the air. I think we need clarity. And unfortunately, I don't think this is a week we get clarity. In fact, I think this is a week we get, again, more noise, more rattling the cages, and markets will not be happy with that.
Do bonds serve as some sort of haven asset, especially in light of the potential tariff issues? The fact that are we going to get all of the income that we previously had expected? Is there going to be a $200 billion refund to small businesses that were tariffed?
I think that refund's going to take a long time to play out. I think it's going to be selective. I think there's going to be pressure not to actually claim the tariffs. I think a lot of companies might just say, you know what, this isn't worth the hassle. So we'll see where that all plays out. I think treasuries, we should be at low 4% on 10s. But again, I've been bullish 10 since like 425. You're at that 405, 406 level. I'm a little bit more indifferent. I think we got a little bit more room to lower yields. But again, I think it's limited on how much of it safe haven it can be at current yields, given the inflation story and given all the uncertainty that's going on in terms of tariffs, potentially embargoes, all these things.
When it comes to uncertainty, Stephen Major was talking about how that basically just means deferral of decisions. That's not good for growth, Peter. What kind of response do you think we could see from Washington or maybe the Federal Reserve?
I think this ties back to your other question about, AI and jobs, right? Uncertainty is not good for hiring, especially in this day and age, right, where everyone's looking, well, maybe I can just squeeze a little bit out of AI and avoid that hiring. So I think this is really detrimental to jobs. I continue to believe we will get 3 cuts by September. I think the market's not pricing in cuts fast enough. And I'm still willing to bet probably 50-50 that Powell delivers 1 cut. And it's going to be because of jobs. And all this uncertainty is going to add to that jobs uncertainty and lack of hiring. That's my big fear right now, is we're a little bit too comfortable with the job situation and more comfortable than we should be.
Peter Tchir of Academy Securities, thank you so much, and good luck out there today. I have to say, Annmarie, I don't know about you, but yesterday I was not that excited about hearing that we were going to get 2 feet of snow here in New York City.
After we just had 2 feet of snow, what it feels like 2 weeks ago.
And it hadn't lasted. It lasted forever, and it turned black, which was lovely, or different shades of other colors as well. And meanwhile, the children were very excited, and I was just thinking to myself, well, of course you would be.
Well, because Mgmt has reversed course, and now it's a full-fledged snow day, so I'm sure the children are very excited. They're watching.
I have a photo montage of them waiting for the decision. They were waiting for the drop. It looked like them waiting for a jobs report, and then getting very excited when they found out. Right now, let's get you an update on what's going on out there, as well as, of course, other things happening around the world. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hey, Lisa. More than 35 million people across the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York City Mayor Zohar Mamdani closing streets, highways, and bridges to most traffic from last night through noon today. And as you said, public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. Meanwhile, the U.S. and Iran are set to resume nuclear talks in Geneva on Thursday. The talks coming in the face of a U.S. military buildup in the region. Iran's foreign minister says Tehran is working on a proposal for an agreement that meets the needs of both parties. He also said the Islamic Republic will not be pressured by the U.S. military buildup. And Mexican authorities killed a top drug cartel leader in a military raid in the western states of Jalisco. The government says Nemesio Ruben Osguera Cervantes, also known as El Mencho, was killed along with 6 cartel members. U.S. officials celebrated the killing as Mexico is under intense pressure from President Trump to stop the flow of illegal drugs into the U.S. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. The images overnight, pretty shocking, coming from Mexico. Up next, a tariff defeat.
The president announced 15% global tariff using a very robust authority. The president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
Former White House trade official Kate Kalutkiewicz joins us next to hash through the details. This is Bloomberg Surveillance. Good morning. Good morning. Welcome back to Bloomberg Surveillance as we look to risk assets in the U.S. really fading just a touch, down about 0.2% on S&P futures as people assess just how much uncertainty was thrown back into markets as a result of the SCOTUS's IEEPA ruling. Meanwhile, a little bit of dollar softness, just fading a touch. The euro dollar 117.94, 10-year yields lower by about a basis points, and crude getting a little bit of a breather after being bid up on the heels of an Iran threat. Under surveillance this morning, tariff defeat.
The president still has the most draconian measure for negotiations. The president announced on Friday and then amended over the weekend 15% global tariff using a very robust authority. The president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
Here's the latest. The White House defending President Trump's hike on global tariffs to 15% on Saturday. Trump raising the levy again after the U.S. Supreme Court struck down his sweeping tariffs. Bloomberg's Mike Shepard and Brendan Murray join us now. Mike, just want to start with you about the reversal that we got on Saturday. Why did it go from 10% to 15%? Do we have any more rationale?
Well, the rationale in part is that they see this as a bridge to the next round of tariffs that would replace the authority that was struck down on Friday. And the idea is that they would not only have the revenue in place, but they're also trying to send a signal to trading partners that they do mean business. And it's not just about ensuring that the global average tariff rate reaches a certain point. It is also a sign of conviction. And they have tried to encourage trading partners to abide by those agreements that were struck when the tariffs that were invoked under IEEPA were initially put into place. But so much of that has been thrown into doubt. And we are seeing moves by the European Union to revisit whether to approve the U.S. trade deal, the Turnberry Agreement. And we've also seen India decide to scrap a meeting that was scheduled later this week to talk about its trade deal with the U.S.
Well, and Brendan, this is what you've been tracking all morning. What more details do we have on the European Union? What freezing this ratification process really means, and what leverage the U.S. still holds given the other tools that are at play?
Yeah, well, this is really going to annoy Washington, the fact that the Europeans are essentially putting the brakes, or at least suspending the implementation of their end of the U.S.-EU trade agreement. The U.S. administration has been pretty vocal recently and complaining about the fact that the EU is dragging its feet on these issues, and so the fact that it's kind of they're halting the implementation of it until they get more clarity isn't going to go over well with the Trump administration. That said, most other countries, if they're not saying it publicly, are in a similar boat. There is no clarity about what really matters here, and that are the tools that the Trump administration are going to use next. Sure, the tariff policy remains in place, and those will be the main instruments by which the president will try to carry out his economic agenda and foreign policy agenda. But the tools and the details of those remain unclear if your exports are on the receiving end of those tariffs. So they have questions in Brussels and right across Asia, those countries, some 20 of them, that have struck these deals with the U.S.
Mike Shepard, Brendan Murray, both of you, thank you so much for being with us. Annmarie, we heard from Jameson Greer, the U.S. trade rep, on a whole host of different issues on the talk shows yesterday, saying that they're looking for continuity. They're hoping that this really does not shake some of the agreements they've already gotten in place. I just wonder what kind of contingencies there are and what your response is to the fact that some of these deals seem to be breaking down.
Well, when it comes to the European Union, they're pressing pause. But I did speak to some officials abroad over the weekend that have been dealing with the administration. They're saying this doesn't really change anything. We knew that the Supreme Court was going to strike down IEEPA. This administration made it very clear. Tariffs are going to stay. They're just going to use other avenues. Some of the individuals I talked about mentioned 301s. So right now it's going to be a 122 to a bridge to something that's more legally binding, like a 232 or 301 that we actually have in place right now on certain sectors and countries.
122 to 232, 301. Keep track. Former White House trade advisor Kate Kalutkiewicz writing, the ruling may open space for further litigation on other tariffs imposed by the Trump administration. Kate joins us now. Kate, have you slept in 24 hours?
It's been an exciting weekend. You know, the weekend we were always hoping for. But as we say, it's always good to have a Friday morning to a Friday evening decision. So we were able to get some work in on Friday.
So, Kate, how much are companies trying to sue to get some of the refunds to the tariffs that they have paid over the past 6 months?
Well, I think a lot of companies are still waiting and seeing what's going to happen. I think the Treasury Secretary yesterday said very clearly that, the federal government will abide by the lower courts. We have to see how this plays out. Of all the things the Supreme Court ruled on, of course, they did not give clear direction on refunds. So I think a lot of companies continue to be in a wait and see posture to find out what happens next there.
These are not just small businesses. We're talking about Costco, we're talking about Alcoa. How long could this take when it comes to the U.S. International Trade Court in deciding whether or not these companies get refunds?
Well, we've not seen a litigation like this before, so it's hard to predict. And even the president in his conference on Friday suggested that this litigation could go on and on. So, I think some companies, of course, will lead the litigation. We've seen Costco take a leading role there. But they're the guinea pig in a way. And I think everyone else is going to continue to employ cost-saving measures as they can to deal with the tariffs. But, the reality is whether or not we have IEEPA or some other measure in place, a high tariff scenario is where we're going to be. So I think a lot of the strategies these companies have been using are going to have to continue to be on the table.
When it comes to IEEPA, though, how much of the U.S. trade policy from last week on, not currently because it was struck down, was tethered to using IEEPA?
Well, the trade strategy itself, I think, of course, we have many authorities to employ to maintain very high tariff rates. IEEPA, of course, was a tool of the president. He liked to use it because it was quick, it was fast, he could take it on and take it off. But as we've seen, and as you just mentioned, there are a number of other 3 numbered authorities the president can tap into. I think the most significant difference, not necessarily with 122, which is just the bridge to these other authorities. When we end up in a scenario with 301 tariffs or 232 tariffs, these become much more durable. And I think they actually lead to a tariff environment much more lasting beyond this particular administration. So what we may end up with here is a durable Trump tariff scenario, which we didn't have in the IEEPA environment.
Kate, I was looking into the Supreme Court decision, the dissents, as well as some of the accompanying remarks from Chief Justice Roberts. And it seems like the big message from the majority was, hey, Congress, where are you? Why are you not taking back the authority that the Constitution gave you? What chance is there that a majority of Congress members will actually vote for tariffs at a time when they're up for re-election and potentially affordability issues will really make this politically infeasible?
I think you just answered your own question. I don't think it's that feasible. I mean, we've seen Congress, not only this Congress, to be fair, several successive Congresses be unwilling to take away this tariff authority, be willing to act in favor of what we call trade promotion authority to use what the Constitution gave them to control the power of tariffs. And as you described, we are in a midterm scenario where, the issue of affordability, the issue of tariffs is very front and center. On one hand, the Democrats want to use this issue, of course, to put pressure on the administration and Republicans and have them own this issue of rising prices and affordability concerns. But the Republicans can't cross President Trump here. He issued a very firm statement a few weeks ago that criticizing the tariffs would be seen as criticizing him. He will put pressure on them to certify these tariffs, but I don't think the administration feels they need Congress. So I predict we'll see Congress continue to just avoid taking their constitutional responsibility in tariffs and leaving the pressure with the president.
Kate Kalutkiewicz, thank you so much for being with us as former White House trade official. After what has been a very busy weekend, I saw you making a face about the durability of some of these tariffs, but it really raises this issue given the fact, as I was researching it, 122 lasts for 150 days.
Never been used either.
It never has been used, and then these others come in, but there are tests that they have to pass.
232s and 301s are more durable because they have investigations. My big question is, if the administration knew that potentially they were going to get held up in courts using IEEPA, why didn't they just do the work of 232s and 301s, which require investigations from the very beginning, and then we wouldn't be in this situation?
I love how closely you're tracking this. I'm really trying to keep up. 122. 301.
I'll give you the list.
232. You'll give us a list. Coming up, we've got former senior U.S. intelligence official Norman Roule as the U.S. is set to resume talks with Iran this week. Plus, Yahira Anand with your Morning Movers International paper falling on new tariff concerns. From New York, this is Bloomberg Surveillance. Seeing just a bit of a risk-off tone as people assess what the fallout will be from the Supreme Court's ruling overturning the IEEPA tariffs. We are seeing that risk-off feeling more significantly actually in small caps, which had been the outperformers. Russell 2000 down 0.4%. NASDAQ futures down 0.4% as well, ahead of NVIDIA's earnings on Wednesday. S&P futures lower by 0.25%, 3 hours away from the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Another turn in the bidding war for Warner Brothers Discovery. According to a filing, the Justice Department is taking a tougher stance as it evaluates Netflix's $72 billion takeover, looking not just at the deal, but whether it gives Netflix outsized leverage over filmmakers and could create a monopoly. That deeper probe could stretch the timeline, potentially giving Paramount Skydance more time to strengthen its offer. So for that reason, shares are up 1.6% in the pre-market. Turning to VF Corp, this is an apparel maker. Shares are falling 5.3% after JPMorgan downgraded the stock to underweight, citing increasing tariff pressures on margins. That's despite the Supreme Court ruling on Friday, of course, striking down President Trump's tariffs, a ruling that could, in theory, ease cost pressures, but it appears the market is waiting for more clarity before it prices that in. And we end on international paper. This is a box company. Shares are falling 5.3% on the idea that more tariffs could mean fewer boxes needed for shipping. Lisa?
Thank you so much, Yahira. I'm trying again to sort of play out all of the implications. On our radar this morning, President Trump announcing plans for new 15% global tariffs after Friday's Supreme Court decision struck down most of his sweeping levies. The president's new plan is likely to face legal challenges and create more economic volatility. That's what you're seeing baked into the markets this morning. The EU, following onto that, is preparing to freeze the ratification process of its U.S. trade deal until receiving policy details from the Trump administration. Trade negotiators in European Parliament telling Bloomberg we have no other option. And Annmarie, I know you've been speaking with a lot of trade reps on both sides of the Atlantic, and I'm just curious how they're viewing this, given the fact that it wasn't entirely unexpected.
Not entirely unexpected, and I think the conversations a lot of these trade reps outside of the United States dealing with the U.S. administration have been told basically if the Supreme Court was going to strike down IEEPA, we are going to find those other avenues. Some of them I specifically spoke to said that they knew the administration was going to conduct the investigations for, say, a 301, that would be a country-specific, or 232, an industry-specific tariff. So this 122, as the Secretary of Treasury and Jameson Greer over the weekend talked about it, the USTR ambassador, this is a bridge to more of those, what Kate Kalutkiewicz was saying, legally durable tariff levels. You just have to ask, why didn't they do this from the beginning? Because it feels like we're having Liberation Day Part 2 or Liberation Day Light right now in 2026.
Well, that's certainly what Peter Tchir was saying. And Christine Lagarde, the ECB president, saying you want to know the rules of the road before you get in the car. It's the same with trade. So going to that point of certainty, I wonder how much pushback we're getting because of political opinion as well, domestically in places like Europe or, for example, in Canada.
And also, potentially, what does this mean for a country like the United Kingdom and Australia, which had a deal at 10%? Now they are waking up with a 15% tariff level under this new section that the president is using, 122, which has never been used before, when they already struck a deal at 10%. This is where part of the confusion and a little bit of the chaos is coming from.
It does feel a bit like whack-a-mole, because on one hand you have the trade kerfuffle and a question of what uncertainty lies ahead. On the other hand, you have AI with NVIDIA reporting earnings. And then on the other hand, you have a question about the integrity of markets and what we don't see. Private equity reportedly returning fewer profits to investors for a fourth straight year. This is coming as you do have the industry sitting on $3.8 trillion of unsold assets. A new report from Bain finding distributions as a percentage of net asset value are at the second lowest level since the 2008 financial crisis. This plays into some of the fears that people have about private credit and private equity.
And they started in October with Jamie Dimon saying there's one cockroach, there's others. And then also Mohamed El-Arian saying potentially does this mean liquidity crisis like we saw in 2008? When you look at the Bain research note, the head of the global private practice said the uncertainty caused by Trump's Liberation Day tariffs put a sudden brake on deal activity that looked like it was gangbusters as recently as January of last year. And I wonder if we just have that same story continuing into this year as well. As we just said, this is Liberation Day light.
So in the whack-a-mole, it goes from trade to private equity to geopolitics, and we do have to focus on that. Crude coming off their highest level since July. The U.S. and Iran are preparing for another round of nuclear talks. The two sides are set to meet on Thursday in Geneva. Bloomberg's Will Kennedy joins us now. Will, can you just give us a sense of what the equation is for oil markets, which typically are the first to react to any kind of conflict in the Middle East?
Good morning, Lisa. Yeah, oil a tiny bit softer today, but that's after a significant run-up of 6% yesterday. Brent at around $72 a barrel, and that was clearly on concern that there would be some kind of military action in the Gulf. And going into the rest of the week, it becomes quite binary. Will these talks on Thursday yield an agreement? Will Trump decide to strike either before or after? I think the comments from the Iranian oil foreign minister that there could be a deal was welcome news for the oil market. But clearly, as long as those two carrier groups remain in place and we have this unprecedented buildup of naval US forces in the region, the risk of military action is going to be there. And the great unknowable for markets is how Iran would respond, whether they would take action that restricted the flow of oil out of the Gulf of the Persian Gulf through the Strait of Hormuz, which of course could impact not just Iranian exports, but Iraqi, Saudi, Kuwaiti and Emirati exports too, and be a huge event for the global oil market.
Will Kennedy, thank you so much for that. And we will be watching that. Former senior U.S. intelligence official Norman Roule joins us now. Norm, thank you so much for being with us. Will was just talking about how it's unknowable exactly what any kind of Iranian response would be to U.S. action. What's your take on how close we are right now to some sort of hot war in the region?
Good morning. We're approaching an inflection point. Thursday represents the third round of talks, and the United States will be looking to see if Iran's proposal, its written proposal from the Supreme Leader's approval, will show any indication of softening in the Iranian position. That is unlikely. But if there is no change in the Iranian position, then we are rapidly approaching the end of the president's deadline for some sort of significant change in Iran's position on its nuclear program, missiles, and regional militia building. That's going to be about March 3rd, based on the original February 20th announcement. The president has all assets in place to conduct a massive air and missile campaign against Iran's strategic capabilities, against which Iran has no credible defense, therefore leaving it only external operational capabilities, which it will likely employ. So Thursday is going to be an indicator of whether we're going to see any significant change in the direction of this initiative.
Well, Steve Witkoff, who will be there on Thursday, Norm, said to Fox News over the weekend, the president is, quote, curious why Iran has not shifted course despite mounting U.S. pressure in the region. Do you think Iran will come back to the table with any sort of change of heart, given the vast array of military hardware right now in the region?
Well, Iran needs to buy time. Iran needs to extend this process. Iran also needs to promote debate in the United States and debate between the United States and its partners abroad. So Iran needs to come up with enough of an offer to keep the U.S. at the table, enough of the offer to promote a debate between the president and his advisors that perhaps diplomacy has hope, but not to do anything that would provoke the initiation of military action, which would threaten an end to the regime.
Well, when it comes to how Iran thinks about this, when it comes to the regime's survival, what is worse, potentially capitulating at the negotiating table or having to deal with a military assault?
I think you're touching the heart of the matter here. There is highly likely a significant debate ongoing within Iran on that very question. The president and his advisors are almost certainly attempting to shape that debate through the presence of the U.S. military forces and the diplomatic campaign against Iran, just as Iran is attempting to shift the debate in the United States on this entire initiative through its defiance, its use of only indirect negotiations, its use of engaging engagement with partners and allies. So there are debates within each side as to the direction of where they take the future of their countries on their engagement with the other.
There's a lot of reporting the president has yet to make a decision. But Norm, given all of your years of experience, have you seen this sort of military buildup, which we haven't seen since 2003, pre-invasion of the Iraq War, and then an executive not decide to have at least at minimum a minimal strike?
Well, to be clear, we have never seen this sort of military buildup against the Islamic Republic in the history of the Islamic Republic in the United States. We have also not seen this level of military buildup in the Middle East since 2003. We have also not seen this level of military buildup without the United States employing that military buildup at some point. So it's going to require some significant concession by the Iranian government to justify withdrawal of that military contingent.
Norm, how stressed is the U.S. naval contingent given the fact that some of these deployments have been pretty long and have been extended pretty significantly?
Well, the deployments have been long, but this is an incredibly well-trained force. There is absolutely no evidence whatsoever that the U.S. forces have been stressed in any way to the point that it would degrade operational capability or morale or on any other indicator that would reduce the threat it poses to Iran or the operational ability of this force to manage the mission the president has put in front of it.
Norm, just on a broader scale, how imminent is the threat coming from Iran right now? In other words, is this the right time to make some sort of strike or make some sort of ultimatum, given the fact that there could be potentially a rebuilding of the nuclear capabilities, and there still is really questions around how much they can go back to their former strength?
I think there's a different way of looking at the question. The United States and Israel have severely degraded, if not destroyed, Iran's nuclear weapons capability. Do we want them to rebuild that capability, or do we want to do something to stop them from rebuilding their capability? Iran's missile program is advancing in its sophistication, and it is a genuine threat to Israel and partners in the region, and it is moving in the direction of an intercontinental ballistic missile, which is a threat to the United States and Western Europe. Do we want to stop that or not? And the Quds Force, which created all of the militias in the region, is still in existence, and it is going to try to rebuild those militias. Hezbollah, Hamas, and the Houthis still exist. Do we want to stop that or not? So the question is really this. Do you want to kick the can down the road and pay the price later, or do you want to do something about it now while Iran is facing all of these stresses? So the president's approach has a logic to it, a significant logic. This is a moment to do something. The question is, do you want to pay that price now or risk paying a higher price later?
Former senior U.S. intelligence official Norman Roule, always wonderful and insightful. Thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anna and Yahira.
Hi, Lisa. More than 35 million people across the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York City Mayor Zohran Mamdani closing streets, highways, and bridges to most traffic from last night through noon today. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. President Donald Trump wants former U.S. Ambassador to the United Nations Susan Rice removed from the Netflix board. The president's posting on Truth Social, quote, Netflix should fire racist Trump deranged Susan Rice immediately or pay the consequences. The post comes in response to Republican political activists who quoted Rice as saying corporations who took a knee to Trump will face an accountability agenda from elected Democrats. And over in Mexico, authorities killed a top drug cartel leader in a military raid in the western state of Jalisco. The government says Nemesio Ruben Osguera Cervantes, also known as El Mencho, was killed along with 6 cartel members. U.S. officials celebrating the killing as Mexico is under intense pressure from President Trump to stop the flow of illegal drugs into the U.S. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, holding China accountable.
The purpose of the meeting with President Xi, it's not to fight about trade, it's to maintain stability, make sure that the Chinese are holding up their end of our deal and buying American, agricultural products and Boeings and other things, and making sure they're sending us the rare earths that we need.
China Beige Book CEO Leland Miller joining next as people reassess exactly how that relationship is going to progress in light of the IEEPA ruling. You're watching Bloomberg Surveillance. Good morning. Welcome back to Bloomberg Surveillance. We are seeing just a little bit of a risk-off move in U.S. equity futures, although that's really fading as the morning goes on in terms of just how wide the losses are. 0.4% decline on the S&P. The dollar clawing back some of the losses from earlier this morning. An interesting note from Kit Jukes at Societe Generale. We're now past the peak tariff levels. The biggest winners are going to be in EM, but positioning data still shows a large and growing net U.S. dollar short position, limiting U.S. dollar weakness from here. So maybe that is part of what's going on under the hood. Under surveillance this morning, holding China accountable.
The purpose of the meeting with President Xi, it's not to fight about trade, it's to maintain stability, make sure that the Chinese are holding up their end of our deal and buying American, agricultural products and Boeings and other things, and making sure they're sending us the rare earths that we need. It's really about monitoring that agreement. If there are places for additional agreement, we'll find them, and developing the president's relationship with each other.
Here's the latest. The White House gearing up for talks between President Trump and Chinese President Xi next month as China gains leverage after the Supreme Court's tariff reversal. U.S. Trade Representative Jamieson Greer says trade deals made with partners still stand. Leland Miller of China Beige Book joins us now. Leland, you had a great note over the weekend, and thank you for being with us, where you talked about how this really does spotlight the China-U.S. relationship and creates a real challenge for the United States going forward. Can you just explain your view?
Well, the tariff regime has completely changed in some ways. The authority has changed, but now you have 15% tariffs announced on the world. Now, for some allies, they're not going to be very happy about that because they had 10% negotiated or they had close to 15% negotiated. So there's a lot of questions around allies and partners. Are we worse off than the deal that we thought we had with the administration? But the larger picture is about China, because if you remember, China's tariff rates for most of last year were much higher than the rest of the world. Now, when we look at our internal estimates, we had about a 21 to 22% effective tariff rate for the year last year. We had a rate that was around 30% as we closed the year. Since the very end of last year, you had a 10% of the fentanyl tariff taken off as part of the Busan détente. The President Trump negotiated with President Xi, and then the Supreme Court just invalidated another 10%. So what's happening with China tariffs is they're coming down, 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 down. If you're trying to maintain a bilateral deficit trend, which you really celebrated if you were this administration, which was much less reliance on China, you're looking at yourself in 2026 and saying, we either need to get those tariffs back up, or we need to understand that the bilateral trade deficit with China is about to surge back in the other direction.
China, how much, Leland, does this really affect the meeting that President Trump has in China that starts on March 31st? It goes till April 2nd. This sort of sets up an awkwardness in terms of how hard can the U.S. go after China ahead of that.
Well, it's only awkward if the White House makes it awkward. They have a decision in front of them, which is we either raise tariffs back up to where they were, in ballpark last year, which created the trend that we're very, very proud of, which is this, declining reliance on Chinese production and Chinese supply chains, or we try not to antagonize Beijing in the run up to the summit, and we deal with the consequences, which is going to be a shift back towards greater reliance on China, towards a more reliance on Chinese supply chains. And greater Chinese competitiveness across the board. So there's a real strategic question the White House has to answer right now, and we're waiting to see how they answer it.
Leland, when it comes to what the United States has effectively on China in terms of a rate, what is it now, given the fact that there was the 10% levied on China on top of a higher rate, reciprocal rate that they negotiated at the trading table?
That's a great question. I mean, we have our own internal estimates, and we work with others on theirs. At the end of last year, there was all this talk about how the effective tariff rate on China was 57%, and then it got brought down to 47% in Busan. It was actually a lot less than that. We had it around 30% towards the end of last year. If you start taking off another 10% of the fentanyl tariffs, you're in the 20s right now. So it's really a question of how much the divergence is between China and the rest of the world. The thing that people have to really keep in mind is it's not about absolute tariff rates for the most part. It's about how much is your tariff differential versus your rival producers. So if China's competing against Mexico or Southeast Asia or India, what is the differential that incentivizes people to move production out of China to those other allies and partners? And if the differential is shrinking, it means that the trends that come from that are going to be not very helpful.
When it comes to the meeting that's upcoming, as Lisa pointed out, the president heading over to Beijing late March, early April, does China now have the leverage, given the fact that the president's own Supreme Court told him his tariffs were illegal?
I don't think so. I think that what's happening right now is a tariff regime that is being replaced by another tariff regime that's roughly going to be the same thing for 2026. And one of the things that we focused on, in the note you reference is showing that, look, tariff rates are not collapsing. Understand that there's a headline rate that seems lower than it was in 2025, but you look broadly speaking, around the globe, it's mostly consistency from 2025 to 2026. What you don't have is, in a handful of countries, you're going to have a very different situation, China being one of them. So as the White House gears up to go over to Beijing and have a conversation with President Xi, they have to be thinking, what exactly are we dangling and what exactly do we want? Now, I don't think they know what the answer to those questions is. But right now, tariff relief was one of the things they were talking about dangling. They don't have tariff relief as something to dangle at this point anymore. So are they going to give up more technology, or what do they want from China? I think these are going to be some very difficult conversations in the White House for the next couple of weeks.
A number of strategists, Leland, have talked about concerns, at least by the United States and by Japan in particular, that one of the negotiating chips is going to be Taiwan, and the U.S. taking a more laissez-faire attitude with either buildup of troops or potentially some of the communiques coming out of the U.S. in terms of how we categorize Taiwan. Do you think that that's feasible?
Look, anything's feasible, but I certainly hope it's not the case. If you look at what a trade deal should be talking about, it should be mostly trade. It should not be talking about whether you're selling out your allies and partners. So I think that there's an interest on the Chinese side, but not an expectation that Taiwan is going to be a big issue on the table. So I don't see any reason to hand them something that they don't need, particularly when it undercuts decades of U.S. policy. I think the president's trying to keep closed lips right now going in to maximize his leverage. But I think that right now it's the White House's job to figure out, what do we want from China? What are we willing to give them? And what are the signals we want to be sending in the aftermath that don't show the United States having come to the table and then giving up a bunch of stuff that we didn't need to do?
Beige Book CEO Leland Miller, thank you so much for being with us. And stay safe this morning. I hear it's piling up pretty significantly.
Yeah, it's pretty bad out there. As what's happening between text messages and emails, a lot of people thanking us, Lisa, for making our way in. But there's really low visibility, and the snow just is nonstop. And there's tons of wind. So it's very scary.
And there's low visibility when it comes to tariffs as well, which is the reason why we are here, in part because it is a significant change in terms of policy and in terms of how this is going to be used as a negotiating tool, given the fact that some of the leverage that the president had seems to have been taken away, at least for the moment.
Right, because IEEPA gave him this broad swath of leverage to, as Kalutkiewicz said, turn tariffs off, turn tariffs on, and really no limit to the rates. But Leland made a really good point. Tariff rates are not collapsing. There are still pretty high tariff rates. And when it comes to this meeting in Beijing, it definitely got a lot more interesting following the Supreme Court decision. But when you hear from what Leland said or what Ambassador Jamieson Greer said over the weekend, it's really about managing the détente right now and making sure China continues to buy agricultural products, Boeings, and that they continue as well sending rare earths to the United States.
So the Yale Budget Lab put out a fantastic chart. I'm sure you looked at it extensively, as did a lot of people I know out in the markets, that before IEEPA tariffs were struck down, consumers faced an overall tariff rate of about 16%. Following that IEEPA ruling, it fell to 9.1%. Then the Section 122 tariffs came on, and it rose to 13.7%. But that's off at 150 days, and will fall back to 9.1%, except for not only 122, 232. You start going through the list. Coming up next, Priya Misra of JPMorgan, Henrietta Treyz of Veda Partners, Crispin Love of Piper Sandler, and Torsten Slok of Apollo, as we parse through the fallout from both the tariff ruling as well as, of course, NVIDIA earnings coming up on Wednesday. This is Bloomberg Surveillance. Good morning.
The world's broadening out and it's speeding up. There are signs of stress in the equity market.
The economy's doing okay. We probably are going to have to go and look at our Q1 GDP forecast and boost those.
I don't think things are as K-shaped as the narrative often portrays.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. As most people in the Northeast are holed away watching the snow fall down, U.S. futures slightly lower, with investors mulling the fallout from Friday's Supreme Court ruling. Questions still looming about the fate of private credit amid Blue Owl's retail fund drama. And eyes turning toward Wednesday Nvidia earnings, with AI still looking like the biggest story of the year. Once we get past what we're looking at right now, which is very much trade confusion, given the fact that right now, Annmarie, it does feel like people are seeing everything just thrown up in the air.
Deja vu, Liberation Day light. How many times have analysts come on this program and said we're past peak tariff uncertainty? Well, it feels like we're not at this moment, given the fact that IEEPA has been struck down by the Supreme Court and the administration is going through all the other policy proposals they can enact to have more durable tariff policy. Right now, they're using Section 122. It's never been used before. It only lasts for 150 days. Then Congress may need to step in. But what you hear from the administration is they say that is a bridge to have something more sustainable. But Leland Miller, I think, said it very well. Tariff rates are not collapsing, which is why it's interesting the market is still struggling to figure it out.
Well, frankly, I think that there's a whole lot of confusion. People don't know what to focus on this morning. That's what it feels like in terms of some of the market reaction. On Friday, we got a market that rallied in the United States. Then, of course, Saturday, the 15% may be causing a bit more uncertainty. There are a host of other issues. You talked about Iran. We have private credit concerns and, of course, the Nvidia earnings. But it does feel like right now markets are just in a turn. The dollar's regained some of its weakness from earlier. I don't get a sense of exactly what the big fear is here behind some of this weakness.
I think maybe the uncertainty when it comes to at least the tariff story is the fact that we don't know yet how the refunds are going to play out. That is going to be weeks and months of being adjudicated in the courts, and that's $170 billion. What does that mean for the deficit if all of that money gets repaid, say to Costco, Alcoa, and a ton of small businesses that lined up for those rebates if the Supreme Court made the decision they ended up making on Friday?
Which is the reason why I'm surprised that today yields are down. Let's take a look at what's going on. You're seeing S&P futures lower. They have been kind of bouncing around, lower by about 0.4%, now down about 1/3%. You can see the dollar reclaiming some of its stability, at least, basically flat versus the euro, but fluctuating between gains and losses, with a question of whether this does prompt the Federal Reserve to cut rates more significantly, whether the U.S. loses luster. Crude doing nothing, and 10-year yields lower by about a basis point. Essentially, nobody knows what to do, and everybody's snowed in anyway, so maybe just stay home with your kids. Coming up, we have Priya Misra of JPMorgan as tariff uncertainty shakes markets. Crispin of Piper Sandler as Blue Owl sparks renewed private credit concerns. And Torsten Slok of Apollo as Fed officials eye potential tariff refunds, as AMH was just talking about. We begin this hour with stocks just dipping as President Trump imposes new global tariffs. Priya Misra of JPMorgan writing policy uncertainty over who gets refunds and whether new tariffs are stacking maintains the headwind to CapEx. Priya joins us now to help explain all of this confusion. Priya, do you have a clear sense of whether this ruling is good or bad for the U.S. economy?
Thanks for having me. No, I think, so I'd say a couple of things. In terms of the average effective tariff rate, I mean, that's probably slightly lower. But here's the issue. The policy uncertainty, to your point, is this good or bad? Policy uncertainty has just gone up. So we don't know refunds. We don't know, we heard that Section 122 is a bridge to some point. But to what point? What kind of 301 tariffs are we going to get? What sort of 232 tariffs are we going to get? So I think policy uncertainty has just gone up. If you look at non-tech CapEx last year, it was negative, which is actually very rare. In a non-recession year, we typically do have some CapEx. So I think this headwind to hiring potentially to CapEx, I think that stays, it might have actually increased. But, I'm hoping we'll get more clarity. I'm hoping we'll hear around these reciprocal trade deals that were done with the UK, with Australia. Maybe we'll get some clarity on that. So right now, it's a bit of wait and watch. I think that's why the market really hasn't reacted all that much. I think rightfully so. The fiscal concerns are long term. I don't think refunds, even if all of them are paid out quickly, which I really struggle with, I'm not sure that we should be really panicking about the deficit here. Treasuries are doing what they do. They're looking at fundamentals, and the fundamentals of the economy are okay, but inflation slowly heading lower. And if tariff rate is going to be slightly low, I think some of that concern around inflation is going to be a bit lower as well.
So, Priya, let's pick apart the threads that we do have in terms of the narrative. Ahead of this ruling, people were talking about how it would be a risk-off event for bonds if IEEPA was overturned as a basis for President Trump's tariffs, simply because those refunds and the revenues would really decrease some of what has been the bull case for bonds. We're seeing yields a little bit lower today, not really doing much. Why hasn't there been a bigger response from fixed income?
So I think to some extent, the market was expecting that there would be some backup plan around tariffs. I mean, I think the world trading order has changed. I think tariffs are part of the policy toolkit. And so I think the expectation was whether it was 122, 301, 232, there would be some tariffs. So I think, it was expected that tariffs are here to stay. I think the other thing is the market. I mean, you've been talking about, is this Liberation Day light? I would say actually it's very different today compared to a year ago. Because while tariffs are here to stay, the concern a year ago was, is the US disengaging from the world? I don't think, everything that's happened over the last year, that's not happening. We're not disengaging. Whether you look at what's happening on the military front or you look at all the trade deals, there was this inflation fear that perhaps inflation would really skyrocket. Inflation's been remarkably stable. And we think if you look at the underlying trends that inflation by the end of the year is going to get closer to 2.5, potentially even lower than that. And then there was this concern around Sell America. And, all of the data suggests there was perhaps a buy America. There was a hedge US dollar, but we didn't see across asset classes the Sell America trade. So I think that the reason bonds are not reacting is some of those fears, the wall of worry that we were talking about for treasuries or fixed income, we've sort of climbed over that. And now we're back to fundamentals. We're looking at, what is the unemployment rate? It's likely to pick up. The Fed cut rates last year. We expect them to cut rates, in the second half of this year. And inflation just sort of heading closer to that, 2% level. I think that's why the bond market is doing what it should do. It's acting as a diversifier to risk assets. We've seen that, over the last few months when you've had risk market concerns, whether it's AI fears, whether it's some weak economic data, bonds have given you that ballast. I think that's why the bond market's a lot more calmer this time round compared to last April.
Priya, do you think potentially the bond market won't be calm, though, when we potentially have $170 billion of refunds being paid out to small businesses and big companies for the tariffs they paid last year?
So that's fair that some of the incoming revenues to the U.S. Treasury would be lower, and they would have to figure out how to make the refund. So let's say I'll give you the worst case scenario for the bond market that you could argue is the tariff refunds go out right away. So tomorrow you can go to the bank and get those refunds, the entire amount. The Treasury would have to raise potentially $170 billion. They've got that much cash sitting at the Fed. So there's no immediate financing need. And I think when I think about the overall deficit, it's a drop in the bucket. Now, if we were completely giving up on tariffs and revenues would be much lower, I think you could argue maybe the fiscal trajectory will be worse. But I think we're just replacing IEEPA with other forms of tariffs. So the going forward revenue rate, I worry less about that. So even in that scenario, I mean, where I would get concerned is if we get some tariff dividend or additional fiscal easing. We have the State of the Union. Do we get some additional stimulus checks being talked about? I think then the bond market will pay attention. But even if the refunds go out quickly, I don't think there's an immediate financing need. There's no concern that the deficit is a problem right here, right now. I think it's a long-term issue with entitlements that needs to be resolved. But no, I don't think the bond market will worry, even if we get certainty around quick tariff, refunds.
Priya, as you're talking amid a beautiful sunny backdrop, we do get a Truth Social post from President Trump. It is a very long one. I'm not going to read the whole thing, or I think it would lead to a very long diatribe. But the Supreme Court will be using lowercase letters for a while based on a complete lack of respect of the United States. Accidentally and unwittingly gave me, as President of the United States, far more powers and strength than I had prior to the ridiculous, dumb, and very international divisive ruling. He went on to say he can use licenses to charge foreign countries, and he can do terrible things to countries. Annmarie, do you have a sense of what he is talking about when it comes to taking away licenses or using licenses to potentially go after competing nations?
Well, licenses are government permits, legal documents that gives companies or entities the right to trade with a government. And I think this goes back to what Peter Tchir said at the very start of the program. He's waiting for Trump to talk about maybe an embargo, basically saying, I'm not going to allow licenses for companies to trade. This would be a quite nuclear option. I think we need to understand a little bit more what the president is talking about here. But he does talk about the fact that he can use licenses to do terrible things to countries, and potentially why there's a lot of consternation in the market because they're trying to understand, can this get worse before it gets better?
And what you are seeing is just a little bit more of a risk-off feel when it comes to equity futures in the United States, but not a significant move. Priya, just a final word on what kinds of retaliation could come in terms of whether some of the risk haven aspect of bonds could be tested or whether this just supports it.
I think whether it's this risk around export license, I think this is just reinforcing policy uncertainty. And, maybe this is a negotiating tool as we have trade deals or at least trade frameworks with a lot of our trading partners. Is this a way to say we stand behind, the U.S. stands behind these trade deals? You should as well. You should ratify it, not freeze it. I mean, I would think that, to your point, maybe this is the nuclear option. I think ultimately we think about businesses, and if you've held back on hiring because you're concerned about trade uncertainty, this is not making it better. Because, I was listening on Friday, people said, well, peak tariff is behind us, peak uncertainty is behind us. No, I think we're in a plateau of uncertainty and we're going to stay in one. And that's going to be a headwind for hiring as well as CapEx. So I think we just focus on fundamentals and the economy is resilient, but I don't see signs of any re-acceleration. And so the Fed should still continue to, over time, get rates closer to neutral, potentially accommodative territory.
Priya Misra of JPMorgan, thank you. And you can trademark that plateau of uncertainty because I have a feeling we're going to be using it a lot going forward. If you want more uncertainty, New York City is under a state of emergency as much of the East Coast faces blizzard conditions. Lionel Moisey of ABC News joins us now. Lionel, how far have we gone in the storm? How big are the totals and what's ahead?
Hey, Lisa. Yeah, we're kind of in the middle of it. We're not in the clear just yet. So the sun has come up. We've gotten a reprieve for like 3 seconds. I'm sure as soon as I'm done with this live hit, snow is going to knock me over. It has been quite windy. The snow is very big, and it's been coming down about 3 inches an hour. Several parts of our area already have a foot of snow. They are on track to get up to 2 feet of snow, and that is why classes are canceled for public schools for students here. And there is a travel ban here across the city of New York, at least until noon. We are expecting an update from the mayor around 1 p.m., so that could also change. But they have been urging people to stay off the roads if they do not need to be on them, so the critical workers can get the roads plowed. A snowplow actually overturned, leading into a hazmat situation a little bit earlier, which is another example of why they just do not want people out there. With all of this, there have been widespread power outages, 5,000 flights canceled today, 10,000 through tomorrow, and we do expect to continue to see a ripple effect. Now, the silver lining or the good news is for the younger kids, and that is because it is a true snow day, so there isn't school, there's no remote learning, but I would imagine that they will be out here in all of this helping their parents clean up as well. Oh. Back to you, Lisa.
I'm sure that that's exactly what they had in mind. ABC's Lionel Moisey, thank you so much for being with us. And that's, I'm sure, what we all hope is that they're out there shoveling. But ultimately, the real question for them is, what about Tuesday? Is it going to be shut down too?
Well, also, apparently, the mayor is saying that anyone can show up. You have to have a certain level of documentation. I think a license, two levels of documentation.
2 methods of documentation.
Which is interesting, because I think you only need one to fly and sometimes none to vote. But you have to show up with level of documentations, but you could make money shoveling. Maybe your children should be doing that today.
They actually were looking into it. They were looking at an age limit, so maybe we can put them to work. Up next, we're going to be talking more about what's going on in Washington, D.C., President Trump's big loss.
Their decision's incorrect, but it doesn't matter because we have very powerful alternatives. I can destroy the trade. I can destroy the country. I can do anything I want, but I can't charge $1.
Henrietta Treyz of Veda Partners joins next. This is Bloomberg Surveillance. Good morning. On Friday, it was a risk-on feel in the wake of the Supreme Court decision. Today, it's risk-off after the tariff rate that President Trump reimposed went from 10% to 15% under Section 122. Get ready to get used to a lot of alphabet soup. You have 44 basis point decline, about nearly a 0.5% decline on S&P futures. You do see the dollar actually reclaiming some of the strength that it had from the weakness earlier in the trading session. Yields lower by about almost 2 basis points now, up 4.07%, rounded up on the 10-year. And crude is going nowhere as questions continue to swirl about Iran. A week ahead that is completely stacked. Really important to say. Of course, we've got NVIDIA earnings, which is going to be the big event on Wednesday. But before that, the State of the Union from President Trump, as well as consumer confidence, Home Depot, Lowe's, and of course, Thursday jobless claims. Under surveillance this morning, President Trump's big loss.
Their decision's incorrect, but it doesn't matter because we have very powerful alternatives. I can destroy the trade. I can destroy the country. I'm even allowed to impose a foreign country-destroying embargo. I can embargo. I can do anything I want, but I can't charge $1.
Here's the latest. The president gearing up for the State of the Union tomorrow as recent polling shows his approval rating is sliding. 64% of Americans disapproving of his tariff policy. Bloomberg's Mike Shepard joins us now. Shep, thanks so much for being with us again. I'm just curious going forward how much the president seems constrained by either popular opinion or some of his Congress members in the Republican Party's opposal to reinstating certain tariffs.
This is a great question, Lisa, because the president really has forged ahead with this policy in spite of mounting evidence that both the public is expressing increased concern about the effectiveness of all these tariffs, and also just the sheer data that we're starting to get on the economic side. The New York Federal Reserve Bank last week put out a study signaling that up to 90% of the cost of tariffs is borne by U.S. companies and consumers and not the origin countries those levies are aimed at. And yet the president has insisted that the tariffs are actually doing good for the country, bringing in revenue to the U.S. Treasury, but also creating leverage that is encouraging investment. We have seen signs that some companies, including Taiwan Semiconductor Manufacturing, are increasing their investments here in the U.S. This is an argument he will be trying to make again tomorrow night here in Washington, but it is one that may ring more hollow in the wake of the Supreme Court loss. And he may be aiming some more of the anger that we just saw in this morning's Truth Social post, and certainly last Friday during his briefing following the ruling. We may see some of that anger directed at the justices who voted to overturn his tariff policy, which is really the centerpiece of his economic agenda. So we'll be watching to see that dynamic and also how he lays out the path going forward as well, including on the questions of affordability, which together with tariffs are increasingly a voter concern.
Mike Shepard, thank you so much for being with us. Always wonderful reporting. Henrietta Treyz of Veda Partners writing, because the president's hands are tied on tariffs until November, be on the lookout for other punitive measures in the trade arsenal. Right on cue, Henrietta, we did get a Truth Social posting this morning that did seem to suggest at other such measures, talking about licenses. Henrietta, before we get into your take on what happened on Friday, what's your take on the idea of using licenses to penalize certain countries?
Yeah, licenses were a prominent feature of the Supreme Court oral arguments. The president brought it up in an interview with the New York Times that was later published. The licensing fees piece allows for the White House to do a lot like, if you'll recall, the ZTE Huawei issue back in his first term, when he could be very punitive, very targeted at individual companies, individual countries, and compel them to stay at the table. That's what a licensing fee can do pretty swiftly. Massively confusing, as y'all were talking about earlier. And to Priya's point from before, not at all any kind of clarity, but it can be very pernicious, a lot like the IEEPA tariffs.
Henrietta, if the administration knew that IEEPA potentially could be struck down in court, why didn't they just go with 232 and 301 investigations from the very beginning?
Excellent question. And I think it gets to the idea that it didn't take any time. You didn't have to get any commentary from the public sector, so businesses or individuals that be impacted. The president could just go it alone. And that's not an option for him with 301s or 232s. And you have to have at least a cursory sense of an investigation. So it takes too long. It is going to get hammered in the public eye. The vast majority of Americans do not support the tariffs. Most companies do not support the tariffs. In fact, it's mostly the labor unions, AFL-CIO, or the steelworkers unions, for example, that actually support the tariffs.
And at this point, he's going to be giving a State of the Union address. He's going to be focused on affordability. As you said, look at the polling. Majority of Americans do not support the tariffs. Is this the right message he needs going into the midterm election? How does he quickly move on from tariffs to something else?
If you look at the president's approval rating, going back to when he took office, he cratered in April on Liberation Day, and he's never recovered. And what we're going through right now, in my opinion, is Liberation Day 2.0. Think of all the uncertainty we have. What is the authority? The resting tariff rates on the UK and the EU have now risen. They are not 10% anymore, or even just 15%. It's 15% plus most favored nation status, which is another 3 or 4 percentage points. So we don't have trade deals with the UK or the EU that have reciprocal tariff rates in them. We don't have any continuity. There's another risk of Section 301 investigations coming. The president changed the rate by 5 percentage points within 24 hours over the weekend. We are in Liberation Day 2.0. And then if you look ahead to July 24th, when these Section 122 tariffs expire, you are now then going to be in Liberation Day 3.0, because we'll have to cycle into those 301s you mentioned. So the confusion is rampant, and I anticipate we're going to see another leg down in the president's approval, just like we did on April 4th.
Neil Gorsuch, the Justice Gorsuch, heavily focused on major questions doctrine, which defenders say basically bars the president from this sweeping broad power, and a lot of questions need to be authorized by Congress. Where is Congress right now when it comes to tariffs? There were some individuals that are staunch allies of the president saying that they should basically have a reconciliation package to push through his use of IEEPA.
Yeah, my odds of reconciliation are 20% or below. You're not going to get another package. You're not going to get a $2,000 tariff rebate. The members don't support it. They voted half a dozen times to strip these tariffs. He doesn't have the votes to extend them, either via reconciliation or not. I think the Republican Party sees that 72% of independent voters oppose the tariffs. Rich households, poor households, college educated, not college educated, rural, suburban, urban, everybody opposes the tariffs. You can't run in farm country on extending the president's authority to impose tariffs that have halted soybean sales to China. It's a losing argument, and one that the president is now entering into for a second time.
Henrietta, it does seem, though, like there doesn't seem like there's a lot of will among Congress members to take back some of the power that the Supreme Court Chief Justice Gorsuch was saying, hey, you guys have this authority. At what point do you see Congress stepping back in, or is this the path of travel that presidential power is only going to grow as the lack of motion from Congress continues to leave no policy really created?
Well, we had actually started to see a bit of a snowball where members were willing to vote against the IEEPA tariffs. Just a few weeks ago, we voted against the Canadian tariffs, for example. But now that the Supreme Court has struck it down, we can be left with sort of the inertia of just waiting for this Section 122 to expire. So I do expect for there to be legislation filed, for example, on issuing refunds, for example, on repealing the Section 122 itself, otherwise condemning the IEEPA tariffs that are now null and void. Members will want to take some of those votes. It's difficult to get them to act, though, because there's an automatic expiration, and they can successfully not see the tariffs extended if they just wait it out. And I think it's really interesting that they go on vacation July 23rd and the tariffs expire July 24th. I think that's amazing.
Henrietta Treyz of Veda Partners, thank you so much for being with us. They also are not in their offices today. They were supposed to come back for a voting session. Evidently,
good luck, though. It's going to be chaos getting back to D.C., which is dealing with snow. And if you think New York deals with snow badly, okay, D.C. is on a whole other level.
An inch and everything shuts down. Coming up, Crispin Love of Piper Sandler as Blue Owl anxiety rattles the private credit market more broadly. Plus, Danny Berger with your morning movers. Merck higher on news. It will split up its human health division. Those shares up about 1%. From New York, this is Bloomberg Surveillance. Good morning. A day of confusion. If you want to see what confusion looks like, look at the cross-asset board. You can see futures declining. Yes, they're down about almost 0.5% for the S&P. You're seeing a dollar that doesn't know what to do. Now it's strengthening. The euro lower versus the dollar, 117.76. Yields lower by about a basis points. Crude going nowhere. Bespoke Investment Group had this out over the weekend that I thought was fascinating. Year to date, the S&P 500 has traded in an exceptionally narrow range, the 2.7 percentage point range, from 1.9% up at year to date, or down year to date for the low, to up 0.7% on the high, is the lowest in the index's history, which just points to the volatility and the paralysis that we have right now.
Right, and all the drama that's been happening under the hood. You'd have to think, though, how much higher would the market be today if Trump just said, all right, the Supreme Court said, I can't do these tariffs, I'll reconsider my options, but doesn't immediately go for the 122 section and go from 10 to 15% in mere hours, doesn't immediately put out truths showing his frustration with the Supreme Court and potentially his ability to use licenses. I wonder how much higher the stock market would be today, this morning. And maybe he should consider that.
You have a good point, though, about the rotation and how much is this tariffs and how much is this really what we're seeing with respect to AI. 2 hours away from the cash open, here are your morning movers. Danny Berger. Danny.
Hey, Lisa, quite a bit happening in pharma today. So Merck announced that it's going to be splitting its company into two. Now, keep in mind, there is a patent cliff for a lot of drug manufacturers. Merck is one of them for their key drug, Keytruda, that happens in 2028. So it'll be separating its cancer treatments and its non-cancer treatment business. Now, relatedly, there was a deal announced this morning of Gilead. It will be buying Arcellx in a deal for about $115 a share plus a $5 share, right if a couple things go correctly. So those shares surging 78%. They are a cancer immunology treatment company. Again, all of this with an eye towards some of the patent cliff expiring and these big drug giants trying to beef up their portfolios. Finally, we asked about earnings this morning from Domino's Pizza. It was a beat across the board for same-store sales, up 5%. They were able to sell higher volumes. They were able to charge more for their pizzas, and they were able to get more in franchise fees from their franchisees. The Bloomberg News team pointing to the success of their stuffed crust pizza. And who am I to argue with that? Lisa?
Thank you so much, Danny. I have a feeling that a lot of college kids agree with you. On our radar this morning, U.S. Customs and Border Protection will stop collecting tariffs deemed illegal by the Supreme Court. The agency says it will deactivate all tariff codes linked to the now-defunct IEEPA-related orders tomorrow. Trade Representative Jamieson Greer saying trade deals with U.S. partners remain in place and should be honored. The EU, meanwhile, is preparing to freeze the ratification process of its U.S. trade deals until receiving details from the Trump administration. And lastly, the U.S. and Iran set to resume nuclear talks in Geneva on Thursday. The Trump administration is pushing for concessions as it continues to build up a military presence in the Middle East. The president warning limited strikes on Iran are possible. And what we were hearing from Norman Roule earlier this morning, AMH, is that increasingly likely, given the fact that we have not seen a buildup of this type without some sort of military action.
Right. We haven't seen this type of buildup since 2003. At the same time, the president hasn't made a final decision. He has talked about, there's been a lot of reporting that potentially that buildup they think would force the Iranians to really negotiate at the negotiating table. Norm Roule says they're just buying time. And I think the key question for the regime right now, do you save face and just take the hit in terms of a strike and potentially be able to shore up your regime? That's the existential threat. Or do you cave at the negotiating table? And that's what they're dealing with right now. And we'll see how the Geneva talks go on Thursday.
Yeah, but this is another thing to watch, given the fact that geopolitics still very much in play, and potentially even more so after the IEEPA ruling. Turning back to markets and a real focus on private equity. Private equity profit returns falling to their second lowest level since the 2008 financial crisis. That, according to Bain. Blue Owl adding to stress in the sector. So that's the private equity side. Of the private credit side, Blue Owl permanently shutting the gate on one of its funds, preventing investors from withdrawing cash and selling assets to return investor capital. Crispin Love of Piper Sandler is maintaining his overweight rating on the stock after cutting his price target earlier in the month, writing, "We view the transactions as an incremental positive and also gives us confidence that its other private credit vehicles will be able to meet upcoming redemptions." Crispin joins us in person, in the flesh. Thank you so much for braving the snow and being here with us. So I want to start with just on a 30,000-foot level. How big of an existential threat do you think has been introduced to the private credit sphere because of retail investor involvement on an increasing level?
Yeah, so it's very interesting on the retail side, and you have to step back, and these are semi-liquid products. So it's this, what we've seen recently, it's actually a good reminder to retail investors that when you're investing in these types of products, they are semi-liquid. you might not be able to get liquidity next Wednesday. It's a lot different than, say, buying a stock of Apple or an S&P ETF. So I think this is a good reminder, and it could impact retail flows over time. But I think it's definitely important to keep an eye on this.
So there are a couple of different aspects of this story that I find interesting. On one hand, there has been a focus on bringing more retail investors in. On the other hand, there's been more investment on the part of private capital to AI-related sectors and to a lot of technology that requires fixed income, that requires credit investors to really back these investments. I mean, how much does this highlight the difficulty of having liquidity at a time of such great uncertainty around what the disruption is going to look like tied to AI?
Right, absolutely. The AI story over the last few weeks has definitely picked up. And looking back a few months ago, it seemed like some names, including Blue Owl, were under fire for being invested in AI and data centers, and people were talking about an AI bubble. And then more recently, in the last few weeks, you have AI disruption and disrupting software. And Blue Owl does screen as one of the higher investors in the software sector. So that's what people are really focused on now. And it comes back to where Blue Owl was able to sell a good chunk of assets just last week, with a good portion of them being software.
Yeah, although they are preventing investors from withdrawing cash, and they're giving sort of a broad distribution, and people are wondering, okay, well, what's left, right? Are they just selling the good stuff at 99.7 cents on the dollar, and do they have a lot of other stuff that there's going to be a little bit more difficult? I mean, I just wonder how much you see this as the tip of the iceberg. We really haven't seen the reckoning just yet.
Right, and I think it's a little bit nuanced when you look at the gating factors that show up in the semi-liquid, non-traded BDC funds. So if you look at OBDC2, so they sold $600 million of loans last week. And what they're doing, it's not necessarily gating or preventing liquidity from going back to investors. They're actually returning capital. So with those sales last week, they sold roughly 35% of the portfolio. Within the next 45 days, investors are going to receive 30% of their capital back, and then 5% plus quarterly on a go-forward basis. So you get to the end of the year, and you have investors receiving 50% of their capital back for this fund. So this was a closed-end fund. There was always going to be some type of liquidity event. It could have been an IPO. It could have been a merger with the public vehicle, which they tried to do late last year. That didn't work due to the valuation of OBDC. So this is the other option where they're going to be returning capital back to shareholders.
There was another story Business Insider wrote about Blue Owl and the fact that they couldn't secure the financing for a data center in Pennsylvania. I think it was about $4 billion. Is that an AI story, or is that a concern for Blue Owl?
So I think it's more of an AI story. When I look at the data center opportunity for the alternative space, there is just so much demand. All the alternatives, Blue Owl and others, Blackstone, et cetera, are looking at so much demand for the AI data center space. And Blue Owl, they acquired IPI a couple years ago, and that's been able to give them a foothold in this space where it's going to be significantly growing over the coming years. And I think, and when you also look at these investments as well, you have to take into account it's not equity, it's more real estate focused or credit focused. They're 15-year leases, there's rent escalators, and they're able to earn very attractive returns on that.
We are seeing Washington sound the alarm on this, notably Senator Elizabeth Warren. Do you think that's going to impact the space and retail investors, and the fact, should people be questions again about should people have this in their 401ks? Yeah,
I think that's a great question. And when I look at the intermediate or long-term risk to what's happening right now, I think it's going to change how retail looks at the asset class and what could happen going forward. The last few years have been really focused on the private wealth channel. And then, of course, there's been a lot of news in the last 6 months or so of potential 401k. And as I said, these are semi-liquid products, so you have to keep that into account. But when I look out over the next 6 months, year plus, this could change how these types of assets are in 401ks. And you could have plan sponsors and employers not necessarily wanting the headline risk of including private credit, private equity into 401k plans.
What's the liquidity backdrop for a number of these private debt investors, based on the fact that we are expecting a significant amount of disruption? I don't know if you watched or if you read Citrini 7 and some of the analysis, the sort of doomsday, futuristic, nihilistic kind of a view of white-collar work going forward. Do they have liquidity to take advantage of some of the fallen angels or some of the beaten up players at the same time that they're being forced to potentially return capital or seeing losses in some of their loans.
Right, absolutely. And I think you look at the liquidity in two separate ways. One is liquidity back to investors like the non-traded BDC funds. And I think the Blue Owl sales last week were actually a positive on that, where they were able to sell 1.4 billion of loans at 99.7 cents on the dollar. And then just on liquidity for investing and taking advantage of whether it's software investments or other areas, the alternatives have tons of dry powder and they have capital to put to work. And that's Blue Owl, that's Blackstone, that's almost everyone in the space where there has been a lot of capital that has flowed in, especially on the institutional side. So they do have the capital to put to work.
As an analyst facing this amount of uncertainty, how do you even begin to quantify what the disruption could look like, given the fact that you're hearing polar opposite equations about what this will do to employment, what this will do to business models, what this will do to the default rate going forward?
Right. Yeah, there is a massive sentiment divide when you look at what the alternative asset managers, the management teams are saying on quarterly earnings calls and intra-quarter versus how the investors are viewing the space. So it's something that we need to keep a very close eye on. And I think if you look at the last couple of quarters, which is when a lot of the worries have really ramped up, is results have been very good, but you have also seen, okay, investors are looking, okay, what's 6, 12 months down the road? And on the software side, all the alternatives, they gave their software exposure. When you're looking at a percent of AUM, most of them were somewhere in the 2 to 8% range. So it's definitely worth it to keep an eye on those. And you have to be focused on, okay, not all software is created equal. It's where are you invested in the software stack.
Crispin, thank you so much for being with us. Crispin
Thank
Love of Piper Sandler. Be safe out there as you try to get home. It's something that I talk about at home all the time, AMH. I mean, this idea of how much disruption there's going to be. And then last night, my oldest son sent me a 6-page prep note orchestrated by Claude that he sent to me for this morning that was, but at the same time, highlighting his use of it.
Well, they do say that actually it's the kids that are getting so used to using this. They're the ones that know how to adapt, and they're going to be the ones that are ripe to have those jobs coming out of college, the individuals that are learning on these AI models right now.
Yeah, and then you talk to their moms and they're all freaking out. So which one is it? We shall see. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anna and Yahira.
Hi, Lisa. More than 35 million people across the U.S. Northeast are under blizzard warnings as a potentially historic winter storm brings heavy snow and strong winds. New York City Mayor Zohran Mamdani closing streets, highways, and bridges to most traffic from last night through noon today. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. Meanwhile, the U.S. Secret Service says an armed man was shot and killed after entering a secured area at President Trump's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. Investigators identified the suspect as 21-year-old Austin Tucker Martin of North Carolina. President Trump was in Washington at the time of the incident. And this was incredible to watch. The United States men's hockey team won their first gold medal in 46 years. Team USA beat Canada 2-1 in overtime. The men joined their female counterparts as champions at the Milan Cortina Games. It's the men's first gold since the, quote, miracle on ice, where Team USA beat the Soviet Union in 1980 on the exact day. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. They might be in Washington, D.C. at the State of the Union, right, AMH?
Yeah, there was a video circulating online. It sounded like Trump talking to Kash Patel. Some reason the FBI director was there and invited them definitely to come to the White House, but maybe even the State of the Union. I mean, it's huge. The U.S. has lost to Canada, I think 2002, 2010. I think this is only our third Olympic gold. Is that what Yahira just said? So, I mean, a pretty incredible game.
Yeah, definitely one that the U.S. will be celebrating. Up next, bracing for tariff turbulence.
We're all doing calculus now, trying to figure out sort of how this feeds through to our individual businesses as well as to our partners. There'll be a lot of turbulence that goes on.
Torsten Slok of Apollo joins us next. This is Bloomberg Surveillance. Good morning. market doesn't know what to do this morning. You are seeing a bit of a risk-off feel, at least in futures in the United States, a little bit of a risk-on feel. If you look over in Asia, it has been up over in China, down about 0.5% on the S&P. You do see a little bit of dollar strength after having weakening earlier in this session. 117.76 euro-dollar cross, and 10-year yields lower by about 1 basis point. Under surveillance this morning, bracing for tariff turbulence.
We're all doing calculus now, trying to figure out sort of how this feeds through to our individual businesses as well as to our partners. It's hard to know, so I guess there are a couple of questions that come to mind immediately. One, is there a requirement to pay back the firms that have paid in the tariffs? If so, that's a lot of disruption, and there'll be a lot of turbulence that goes on.
Here's the latest. President Donald Trump imposing new global tariffs, citing a balance of payments crisis. After the Supreme Court's striking reversal, thousands of companies and importers preparing to launch a battle to recoup billions of dollars in paid duties. Torsten Slok of Apollo remaining positive, writing, "We remain constructive on the U.S. economic outlook, but investors should pay closer attention to tail risks than usual." Torsten, I'm so pleased to say, joins us now. Torsten, thank you so much for being with us. I want to start there with what the IEEPA ruling does for the economic outlook. We were speaking earlier with Priya Misra. She said that this could potentially increase uncertainty, a plateau of uncertainty that could reduce hiring plans. I mean, why do you not see that as a likely outcome?
No, you're right, Lisa. And Raphael Bostic, the NFF president, is right, because we all need to reopen our spreadsheets. First, when the Supreme Court ruling came out, the first conclusion was, well, a trade war is by definition stagflationary, meaning normally prices go up and sales go down. If you then take away tariffs, of course, you will begin to see the opposite, namely Goldilocks, namely lower inflation and higher GDP. And then came, of course, along the 15% on top of that, which basically brought us back to where we were before. So my forecast over the weekend basically went through a little bit of a roller coaster, but it ended up basically the weekend exactly where it was before the Supreme Court ruling. So the conclusion is we will likely still continue to have now some upward pressure on inflation. We will still have a strong economy in the background, but it is indeed the case, as you're saying, that there is still now more uncertainty, especially because the Section 122 tariffs only are going to last for 150 days potentially.
Torsten, are you surprised that yields are a little bit lower, even though there is the prospect of tariff refunds being doled out?
Yeah, because the issue suddenly also becomes if the tariffs have to be refunded, then of course the U.S. government needs to go out and find another $150 billion. And if that has to come through issuance, that of course would mean a steeper curve. So this is why this is a tug of war between more issuance potentially putting upward pressure on rates, and on the other hand, uncertainty, more elevated, still elevated level of tariffs, all that pulling in the opposite direction, namely slower growth and therefore weaker demand.
Torsten, you won a huge applause from the White House over the summer when you said the president may have outsmarted us all when it comes to tariffs. Do you think he's outsmarting us now?
Well, of course, the issue at the moment is that what has certainly happened is that the Europeans, the Japanese, the Koreans, the rest of the world has woken up a lot to a lot of issues that before were just being assumed being dealt with by the U.S. But the issue, of course, is whether the short-term costs are going to be more substantial. And that's, of course, this renewed uncertainty that Section 122 is fundamentally different, of course, from unlimited forever tariffs. Because when it's only 150 days, it raises a lot of questions around, well, what is the persistence, if you will, or how long time are these levels of tariffs going to stay in place? And that does, unfortunately, introduce a new dimension that we suddenly now have to go roughly half a year down the road. And then we need to have another discussion about, well, what is now the level of tariffs at that point?
So what do you think this does to the consumer?
Well, on its own, well, if you look at the Yale Budget Lab, they do have that before the Supreme Court decision, the level of average effective level of tariffs was about 16%. Now going down to 9% after removal of course, with the Supreme Court taking away IEEPA, now back to 15% on top of that. That brings us to 14%. So the short answer, Annmarie, to your question is that the impulse from tariffs went from 16% average effective tariff rate to 14%. So that is a modestly lower forecast for inflation, at least on its own. So in that sense, it's made the Fed's job a little bit easier because we now have that inflation in the forecast is mildly lower than what it was just a week ago.
Okay, so I'm trying to pair all of this together. It's been a very confusing morning for me, I have to say, because on one hand, you've got the tariffs. On the other hand, people are still processing the GDP number for the fourth quarter that came in a lot lighter than expected. People are processing the fact that we got core PCE higher than expected, and they're processing a lot of doomsday prognostications about AI. I'm just wondering where tariffs fit in with some of the other narratives right now. I mean, is tariffs really the dominant storyline, or is it really the AI side and, frankly, even the GDP numbers that were highly disappointing?
You're absolutely right. Well, the GDP numbers, first of all, of course, the BA did say that 1 percentage point was subtracted because of the shutdown. So if you add 1.4 plus 1, you do get to 2.4, which is not too bad. It's still above the CBO's estimate of potential, which is at 2%. But you're right, the list of bullet points, meaning the narratives for how we all talk about the US economy, is getting fairly lengthy. Of course, we have the tariffs. That's been around for a while. We have the AI story. That's now also been around for a while. We also have the important story that immigration restrictions have slowed down, of course, the flow of people coming into the US. That is a very important driver of why job growth has been weaker. And we also have, of course, the general level of uncertainty now coming along with, now suddenly we have to talk about trade wars again. So you're right, there's a lot of different forces pulling in different directions, which is why ultimately the forecast that we view is still that the economy is doing well, but it just tells us that we're going down the fairway. We feel comfortable that there was a 90% chance that we will just continue all the way back to the hole here on the golf course. But now the probability of going down the fairway and hitting out the rough has just changed quite dramatically. Now the chances of landing in the rough have gone up from 10% to 30%. In other words, the tail risks of one of these things going wrong, either AI being widely successful or AI disappointing, could also be something that puts us into the rough. So yes, you're right. The outlook has become more uncertain simply because there's all these potentially very important dimensions in the outlook overall.
Torsten, if AI is wildly successful, will that be wildly unsuccessful for the U.S. economy? This is one question increasingly that people are asking.
Yeah, I know, and there was some discussion on Twitter or X overnight about this. I think those statements are widely exaggerated. Of course, if we do see the unemployment rate begin to go up, of course the government would begin to react. We would see a fiscal reaction. We would begin to see more support to limit the rise in the unemployment rate. But perhaps most importantly, let's not forget, AI is solving tasks. AI is not replacing jobs. And we all in our jobs, some have fewer tasks in their jobs, some have more tasks in their jobs, but there really is very few people, if anyone, in the US economy who only have one task. It's already the case in telemarketing. Even if you think about paralegals, even if you think about all the other things, media, there are basically no workers in the US who only have one task. So this whole idea that AI revolution is going to replace all of us, I think it is just widely exaggerated.
Torsten Slok of Apollo, thank you so much for being with us, and stay safe out there. News anchor by day, snowplower by night. I mean, that's sort of the argument of how people can potentially maybe protect themselves going forward.
Yeah, potentially maybe you have multiple jobs. It is interesting. Over the weekend, though, the Wall Street Journal did have this report from Andy Kessler about the AI hysteria, and basically came down to it. It's not the dystopia and it's not the utopia. Reality is going to be somewhat more mundane, somewhere in the middle. But you are seeing different competing narratives about what actually AI could mean for society. And a lot of questions right now that it's facing the government, and it's going to be a huge part of policy going to the midterms in 2028.
Well, it's going to be a huge part of NVIDIA's earnings coming up on Wednesday. A lot of people looking for them to be the biggest beneficiary of the $650 billion spending plans of just 4 of the big tech names. Coming up, we've got Jason Draho of UBS, BMO CEO Darryl White at an infrastructure conference, Blerina Uruci of T. Rowe Price, and John Vinh of KeyBanc. From New York, this is Bloomberg Surveillance. Good morning.
There's not really a set way to refund these tariffs, given how big the amount of money is.
Our thought is that the tariff regime will continue.
At some point, all these tariff discussions will be settled.
The court might change the process. Tariffs are here to stay.
Tariffs are an important tool that are not going away.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. U.S. futures lower with investors gauging the fallout from Friday's Supreme Court ruling. Trade policy remaining in flux ahead of President Trump's State of the Union address tomorrow, and a slew of earnings reports coming out throughout the week, including NVIDIA, also Home Depot and Lowe's, as economists look for new signs about the U.S. consumer. Very much a focus on what the tariff ruling will mean for the consumer, given the fact that they paid all of these tariffs and the refunds are likely to go to the companies if they go anywhere. The confusion still swirling.
Right, $170 billion about that we could potentially see refunded back to these companies that lined up already to sue the government for refunds. We're talking about massive companies like Costco, Alcoa. I think this is going to be a huge question when it comes to Lowe's and Home Depot this week when it comes to their earnings call. How do you view the new tariff rate? And do you think you're going to get refunds? And what does that potentially mean for your pricing power with U.S. consumers?
Yeah, and right now it seems like markets are trying to digest this and don't really know what to do with this. Ian Lingen of BMO Capital Markets coming out, priced for uncertainty. He pointed to the idea that 10-year yields are lower by almost a basis point, or really not moving around doing much at all, even though there is this question about what refunds will do to the fiscal deficit, what this will do to the revenue backdrop. Meanwhile, S&P futures lower by about 0.5% after closing higher on Friday. The swirl of uncertainty around what has to get repaid, but also the path of travel going forward with 122, 232, and 301 very much on the table.
Well, the path forward is 15% for 150 days, and then they're going to do something that's legally more durable, which we already have when it comes to 232 sectoral-specific tariffs and 301 investigations. Now, this is why I think it could get a bit confusing, is the president is clearly furious. You saw that Friday on display at the White House, and you're seeing that this morning with Truth Social posts. Likely, tariffs are going to dominate headlines every single day until we get a little bit more clarity. And right now, we're not going to get that clarity anytime soon.
And we thought that we were past that, right? The peak uncertainty was beyond, and maybe we're just in the plateau of uncertainty. As Priya Misra said earlier this morning, right now, we are looking at futures just a bit lower. Coming up, we've got Jason Draho of UBS Global Wealth Management with stocks just off a bit. BMO CEO Darryl White breaking down the cost of critical mineral dominance. And John Vinh of KeyBanc Capital Market previewing another big event this week, NVIDIA's earnings, which a lot of people have been waiting for. We begin this hour with stocks sliding down about 0.5% on the S&P as uncertainty weighs on Wall Street. Jason Draho of UBS Global Wealth Management writing, once the dust settles on the Supreme Court decision, the administration's tariff decisions may still favor running it hot. Jason joins us now. Jason, thank you so much for being with us. So explain, why does it suggest to you that it leads to a run it hot type of scenario amid a plateau potentially of uncertainty?
Well, I think we need to look at the current situation in the context of where we came into the year, right? The common narrative in the marketplace was it'd be sort of this run it hot environment where growth would accelerate because of both past stimulus, but also the assumption that you have the president who'd want an economy that would be strong going into midterms. We saw the first week of the year a number of policy announcements that all dealt with sort of affordability or trying to lower the borrowing costs. So the question is, like, has the development with the IEEPA tariffs really going to change the view of like how the Trump administration is going to approach policy this year? Annmarie just mentioned that the president is clearly unhappy with the results. It's going to dominate the headlines. But when the dust settles on this, are you ultimately still going to get a direction of travel where the effective tariff rate, which is kind of the simple way to think about this whole tariff dynamic, is it still going to go lower this year? And that was saying a lot of people were assuming that ultimately it would drift a little bit lower. Has that really changed or not? And I think right now I'd say it probably has not changed. But we don't know for sure. But I think the direction of travel still is that ultimately that's going to go lower, that you have an administration that would want the economy to be relatively strong going into midterms and not actually look worse from a stagflationary perspective.
Uncertainty takes a toll, though. We've seen this a number of different times. You have companies that are facing off with the uncertainty of AI and what kind of disruption there could be. You're facing off with companies that are unclear exactly what kind of tariff regime they're in. You have companies that are facing off with the uncertainty of what trajectory the economy will be in. So why do you see this as not being enough to pose a drag on growth the way that Priya was talking about?
Well, think about what's already in the pipeline for growth. We have stimulus that was passed through the One Big Beautiful Bill. We're seeing tax refunds coming in now that's at least running ahead of last year. This is the kind of expected. You're going to see incremental CapEx spending from AI that was bigger than what was expected just 3 or 4 weeks ago. So we should see a momentum boost going forward. So the question then is like, well, how much should this uncertainty relative for tariffs weigh on that path going forward? And that's that's an open question. Is it 0.1% of GDP? Is it 0.2? I think it moderates a little bit, but we're still likely to see growth accelerate for other reasons that were already sort of taking place and that are not easy to reverse, at least in a very short time period.
Well, when it comes to reversing, I'm thinking of the refunds and the potential refunds, $170 billion worth that the U.S. lower court for international trade will be dealing with. If we do see big refunds to corporate America, is that market positive or negative because the deficit?
Well, it's probably more positive for equities and sort of negative for fixed income. I think ultimately, again, if it comes down to you're shifting where the tariff burden lies. So if you take the administration's word over the course of the weekend that ultimately tariff revenue this year is not going to be a whole lot different than it otherwise would have been, that shouldn't really have a material impact on where rates are, especially the back end of the curve. If these tariff refunds actually take place over a period of time, then it probably becomes very company specific. Those who have the ability to kind of reclaim those tariffs let's say it's some of the big retailers, if they're not necessarily going to pass that on through, lower prices going forward, it's not necessarily the exporters. Ultimately, that should just be a net benefit for those individual companies, not necessarily the markets overall. So, I'm not saying this is a non-event at all. That's not the case. But I think we have to sort of think about what is the material change in the economic outlook. And if we compare this to Liberation Day, where that was a much higher level of tariffs than investors expected, I think this is more adjustments at the margin. It creates uncertainty. That's not helpful. But I don't think it changes the overall narrative for the marketplace. Once we kind of step back and think about a couple of weeks where we're going to be versus where we are right now.
Well, where we're going to be in the summer is that the 122 expires, and they're going to be introducing the new investigations of 301s and 232s. At the same time, you say they want to run it hot. Can we expect more when it comes to fiscal policy out of this Congress before the midterms?
Well, I think that's very unlikely. I guess the real question is how much does the administration go forward with these investigations? We know they will. The question is, when will they impose tariffs? What magnitude will they be? There's a lot of discretion there. And so once again, sort of maybe things calm down a little bit. What levels will they put it in? And will they do it in such a way that will create perhaps exemptions, carve-outs, things that were already taking place with certain food products, steel and aluminum, that would again suggest that the overall direction of travel for the effective tariff rate, the overall drag on the economy from these tariffs, is actually going a little bit lower, not higher. Again, this is a conjecture. But I think that's sort of not an unreasonable conjecture that ultimately that was the path before. Has it really changed? Maybe the magnitude, but not necessarily the direction.
So, Jason, would you be taking advantage of the uncertainty that's currently being priced in on the margins, the fact that you've seen the S&P essentially going nowhere, at least on an index level? And would you recommend that your clients go more heavily into U.S. equities at a time when everyone's looking outside?
Well, the story that we have for the markets right now is that we kind of call it the great broadening. That the equity markets, for multiple years have been dominated by U.S. large cap growth companies, large cap tech. What we're seeing over the past year, and it's continued this year, is sort of broadening out of performance, whether it's within the U.S. to other sectors that we like that are more cyclically oriented, whether it's international markets. So we think that will continue. That story has not changed. And it is true that the S&P has been a pretty tight range from about 6,800 to 7,000, really for a couple of months. That may not really change materially, but within it, there's sort of opportunities. And ultimately, we think as the economic data sort of materializes, you see the acceleration as earnings kind of come in and you have sort of stalled earnings growth, that will be sort of allow the market sort of break above the range they've been. It may take a little bit of time because there is this tariff uncertainty. There's still the questions about AI disruption, like how companies will sort of work through that. But the direction of travel to me is ultimately the economics and the growth story for earnings and GDP will justify equities in the U.S. and globally going higher by year end.
In this kind of environment, Jason, do you prefer liquidity over liquid assets that might offer, at least on the face of it, a little bit extra incremental yield?
Well, I think at least from an equity market perspective, one of the things that I sort of think about, especially dealing with wealth clients, those who can have a longer horizon, in some ways, if there's a lot of volatility, you get market pullbacks, you can be a liquidity provider rather than asking for liquidity. So I think that's something that I look for is, if there's dislocations or disruptions in the marketplace for reasons that are perhaps technical related, as the markets sort of overshoot as they react to this information, does it create opportunities to sort of take advantage of that if you can take a long-term horizon? So that's kind of the way I think about the liquidity dynamic right now. Given the market's volatility, it's really hard to be too nimble. So it's trying to take a perspective like, do you ultimately believe the long-term structural story has changed? If it hasn't and the market sort of is dislocated, that's an opportunity for you to provide liquidity rather than sort of taking advantage of liquidity in the marketplace.
Jason Draho of UBS Global Wealth Management, thank you so much for being with us this morning. As we are sitting here in this lovely, warm studio, New York City is in a state of emergency. Much of the East Coast faces blizzard conditions. Lionel Moise of ABC News joins us now. Hopefully he hasn't blown away, although he does have some more snow on him. It does seem like things have kind of picked up.
Yes, things are picking up, and you're rubbing it in my face, but this is the name of the game. We have had a lot of snow. It has been coming down constantly all morning. The snow is getting a little bit bigger. It is coming down heavier, and the wind is certainly blowing. We are in a travel ban until noon here for the entire city of New York. They have just extended it just a few minutes ago for New Jersey as well. They really want people off the roads so they can focus on clearing them and keeping everyone safe. And these conditions are not going to let up at least until a little bit later this afternoon. So this has been an ongoing situation. I have been standing in this one location since about 3 o'clock this morning, and it has constantly just been coming down.
Well, this raises a question, Lionel, about some of the other travel mechanisms, like including the airport. I mean, we do know that 5,000 flights have been canceled. Do we have a sense of what the process is of reopening? I'm thinking about schools with school days, as well as, of course, some of the mass transit.
Yeah, those are really important questions. So mass transit was canceled for things like the Long Island Railroad. Some of the regular subway routes had to be postponed as well. Hopefully those will be up and running sooner. A lot of flights are canceled, though. A lot of people are not going to be getting out of here until at least Wednesday. 5,000 flights canceled today, another 5,000 already canceled for tomorrow. And as we see each and every time that there's a big weather event, there is a ripple effect. It takes a while to get those flight attendants who too might also be trapped back to New York to then get you to your destination home. So, you know, it is pretty. Hopefully people are able to enjoy it if they can do it safely, but we are going to be dealing with this for quite some time.
Well, thank you so much for standing out there, and hopefully you can get warm soon. ABC's Lionel Moise, thank you. Up next, we've got the morning calls, plus BMO CEO Darryl White breaking down the cost of critical mineral dominance. That's coming up next. This is Bloomberg Surveillance.
I think we're going to see pressure on the markets. I think markets would have been relieved to get past the tariff issue, and it seems like it's going to be front and center again. Given that he likes maximum pressure, I expect a lot more noise as he tries to put the clamp back down on China. So that's why I'm a little bit nervous about markets, right? This 10% or 15%, it's not done. That was Peter Tchir of Academy Securities. As we do see equities futures just a bit lower this morning on the heels of some of that uncertainty, down about 0.4%. We had seen dollar weakness earlier this morning, now essentially flat on the euro-dollar cross, 117.85. Interesting to note, and this is something that Ian Lingham pointed out as well, the stability in bonds. It was thought to be this risk-off move in bonds if we did get this IEEPA ruling by the Supreme Court. We're not seeing that image. I think this is interesting given the fact that refunds are probably coming, and this does call into question how much revenue the U.S. will get.
Probably, but maybe not so sure, and it's going to take months. This isn't going to be an overnight story when it comes to the refunds. This is going to be adjudicated in court, and potentially it won't even be all of the $170 billion that individuals are lining up for those refunds. So I think that story is going to take a lot more time to play out. And then what do we have to deal with in the short term? It's the fact that we still have a 15% tariff rate. It's a little bit lower than the effective tariff rate, but as Leland Miller said, tariff rates are not collapsing.
Yeah, and now we deal with licenses. Evidently, we'll be parsing through that going forward. Time now for the morning calls. First up, Alethea upgrading NVIDIA to buy ahead of earnings, calling the stock, quote, too cheap to ignore. Those shares are up 0.3% in pre-market trading. Next up, BTIG lowering its price target on Snowflake ahead of earnings later this week, noting initiatives only target existing customer spends. Those shares lower by 0.4%. And finally, Wells Fargo upgrading Alphabet to overweight, saying it has, quote, key traits of an AI winner. Those shares up 0.5%. Let's head over to BMO Global Metals Mining and Critical Minerals Conference. The U.S. moving toward a strategic reserve as governments and corporations race to secure raw materials. BMO sits at the center of the shift as one of North America's largest cross-border lenders. BMO CEO Darryl White joins us now. Darryl, I hope it is much better weather where you are right now. I want to just start with how important and how much more activity this sector has seen, given the fact that there is this renewed interest in building out the U.S. infrastructure.
Yeah, well, thanks for having us, Lisa. And the weather is a little bit better. I hope you're keeping safe in the snow and the storm. It's very important. When I step back and think about what we're hosting here this week, it really is the greatest metals and mining show on earth. We've got in the neighborhood of 7,600 one-on-one encounters that we're coordinating and hosting. We've got 350 capital providers, which is the most we've ever had in our 35 years doing this. And we've got over 600 corporates who are here as well, taking part in a really important conversation, I think, in this moment in time, in particular, when we think about the global forces that are colliding into the critical mineral space. This is a very important conversation at a very important time for the economy and for the future of the next 5 or 10 years of our resilience agendas.
Darryl, we'll get into exactly what the demand could look like, which metals are going to be priority, what the production plans are going to look like. I am curious how much people there are talking about tariffs this morning, given the IEEPA ruling by the Supreme Court, the fact that metals might be among some of the most affected.
Yeah, Lisa, I think it's early days. I mean, the announcement's a couple of days old on IEEPA. If you look at the market reaction, it's been pretty subdued, as we've all been talking about this morning. I think part of that is because some of the outcome that we saw over the last few days was probably priced into bond markets, so we haven't seen much of a reaction there. And if you talk to most of the corporates that we're dealing with, the reality is, over the course of the last year or so, the instability and the volatility that's been brought by various decisions over the course of the last year on tariffs have become a little bit more normal course. So in the meantime, they've rebuilt supply chains or organized themselves in different ways to have resiliency in how they think about dealing to surprise, or maybe not such a surprise, as the case may be, depending on the audience. So in the meantime, more stable than you might think.
How much do you hear also a discussion around domestic production and expediting some of the licensing around getting, say, for example, the copper mine in Arizona up and running at a time when there is this priority on metals of all sorts?
Yeah, that's a live conversation. I mean, I think it's a very important one, because if you think about the confluence of two forces, we've got the demand being driven by the AI power up. So the newest industries are literally dependent on the oldest industries. In addition to the global order reorganizing at the same time, there's a massive demand push here. And the response to that at the end of the day is going to hit a bottleneck on the supply side. So the needed reorganization of permitting, of getting to market faster, of regulatory reform is a really active conversation. And I think, as you know, we're seeing some positive developments on that, particularly here in the United States.
Are companies feeling confident right now, though, to pour money into the United States in this sector?
I think companies are feeling confident, and perhaps more importantly, we've got investors who are feeling confident and trying to pick their spots. And when we look at the North American continent, it's particularly attractive. There are other places in the world that are attractive as well, but they may come with a higher risk premium.
Do you see consolidation in this space? I know there was potentially going to be a Glencore deal that fell through, but do you see potentially that this space right now, given everything you've described, is ripe for more consolidation?
Yeah, there is a lot of talk of consolidation. We've seen a fair bit of consolidation over the last 6 to 12 months, haven't we? And right now, if I look at our own internal pipelines, they're as full as they've ever been. Our teams have been responsible for advising on 70% of all M&A activity that we've seen in the sector globally in the last 4 years. We expect that to continue as we go through this year. And the conditions, both from a capital perspective as well as the efficiency perspective of the producers, are pretty constructive for that consolidation theme as well.
This is a space that the Trump administration has taken aim on to take actual equity stakes. Has that been positive, or is that concerning to the individuals you're talking to, because potentially it means less competition?
Yeah, but I would say on balance, it's a very good question, but it's generally been positive because it feeds into the narrative of needing more reliable, bankable solutions on particular demand signals. So we've got a demand signal, we can set a floor. Capital craves certainty, as we know, and certainty isn't a luxury. Certainty is something that folks need in the sector to make those investments. So on balance, well structured, these are considered fairly positive interventions. And we're seeing other countries around the world slowly follow step and look at projects like these as well.
Darryl, there is a lot of controversy, certainly in Montreal. I was just actually in Montreal just not a long time ago, and I was overhearing people saying that they're trying to avoid going to the United States. And you could definitely feel a certain sentiment there. Has it made it difficult for you, being both in Canada as well as having increased your U.S. platform, to navigate the growing tensions between the two countries?
Yeah, look, we've been doing business for 208 years, and 207 of them we've been in the United States. So this is a long game for us, and it'll be a very long game for us. We're committed. We continue to be committed to both countries, almost in equal measure. They're very important client bases for us, and we continue to run our strategy as we always have.
How much do companies on a cross-border level have difficulty making decisions about deal making, about investments, when you do see such an uncertain landscape that will affect the long term potentially, right? I mean, you think about the USMCA that could get renegotiated. I mean, how much is that affecting some of the discussions that you hear on the ground there?
Yeah, it is affecting the discussions for sure. I think what you've seen is we're now about a year into the volatility that we've seen around uncertainty of tariffs, all kinds of tariffs. But over that period of time, corporates move pretty quickly. They're able to reorganize their supply chains, make decisions based on the path of most certainty, not least certainty. And you do see some reorganization going on there. And our bankers here have been there to support them through all of those discussions.
Building on Lisa's point and putting hockey aside, we have seen a more acrimonious tone coming from Washington to this government when it comes to Prime Minister Mark Carney. I would just love your reaction from his speech at Davos, which didn't name the United States, but there was that tone that he was calling out the U.S., forcing allies to pick between China and U.S.
Yeah, look, I think in the end, if you look at the economic cooperation between the two countries over a long period of time, we have no anticipation that that's going to change. In the meantime, if you look at some of the middle powers of the world, Canada included, are there things that we can do for our own agendas, that we can consider what's going on right now as a bit of a wake-up call, whether in the country of Canada, it's interprovincial trade barriers, it's productivity and efficiency of our own, or diversifying our trade relationships at the same time as we preserve a wonderful relationship with the United States for the long term. Those are all good things.
You also in the past talked about how Carney should be cutting taxes. You don't think that Canada is competitive on tax. Do you like what you're seeing out of the Carney government?
I do, and I will also underscore that it remains early days. The government has been in power for a little less than a year now with a full mandate. There have been some changes that are positive. There are more changes along the lines of competition, along the lines of competitiveness, along the lines of competitive tax that always should be considered through any government, but I think we've seen material progress over the last year.
Darryl, is this the most attended conference that you've had of this type in terms of all of these questions?
By far. I mean, people are beating down the doors to get in here. The weather happens to be good. I feel for you in New York, but we've got a lot of important conversations going on around here.
BMO Financial Group CEO Darryl White, thank you so much for being with us and having the time today. And honestly, this is going to be a heated topic, especially in the metals issue, given the fact that we're trying to stockpile metals in the United States.
Right. The U.S. administration, this was also a Biden administration issue as well. Critical minerals, this needs to be a national security concern. How they deal with it, we have seen different prescriptions from different politicians.
Yeah, coming up, we'll talk about the economic ramifications of this swirl of uncertainty. Blerina Uruci of T. Rowe Price, as Wall Street looks for more clarity on trade, on AI, on a whole host of things. Plus, Danny Berger with your Morning Movers. This is Bloomberg. Good morning. On Friday, it was a positive for equity futures or equity markets. Today, it seems to be somewhat of a negative, dampening risk appetite, given the fact that we did get IEEPA overturned by the Supreme Court, used as a justification for President Trump's tariffs. S&P futures lower by 0.4%. Interesting response, though, both when it comes to what we're seeing in yields as well as what we're seeing in the dollar. Dollar weaker earlier this morning. Now it is slightly stronger. 10-year yields lower by almost 2 basis points. So given the fact that people were worried about the deficit in the face of some of the tariff refunds, does not seem to be a problem this morning. And of course, you do have that haven bid into gold. 1 hour away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa. Vanda Pharmaceuticals this morning. Shares are higher by a whopping 39%, receiving FDA approval for some of its medication to treat manic episodes for bipolar 1 and schizophrenia disorders. This is now its second drug that is brought to market this year. So again, those shares soaring higher. Elsewhere this morning, all of the paper, cardboard, container-related stocks are all falling a lot. International paper, the poster child, no pun intended, down 7%. An industry report showing that prices have dropped considerably, down $20 a ton month over month. Analysts pointing out that it's bearish for all of these names and shows that there really is a lot of weak demand at the moment. Finally, a little bit of sell-side action. VF Corp, this is the owner of Vans, getting a downgrade over at JPMorgan after their latest earnings were a disappointment for their look-through for 2027 and 2028, the fiscal years of those. So they downgraded and saying specifically their Vans brand is going to need some work before it can improve. So shares down over over 4.33% this morning, Lisa.
Bringing Ska back. Danny, thank you so much for that. Turning to the economy, investors and the Federal Reserve awaiting more clarity on trade from the White House, with President Trump threatening a global tariff rate of 15%. The Fed and everyone else. Bloomberg's Michael McKee joins us from the NABE conference. Mike, I'm just curious how the Fed is going to consider this, given the fact that they were looking through it previously.
Well, pretty much the same way. Chris Waller is probably the second most important man for people on Wall Street trading desks today after the meteorologist, because he's been leading the dovish camp, and he is speaking right now here and basically said that it's too early to make a judgment on tariffs, but he doesn't think they're going to have a significant effect because he said even if the president puts on new tariffs, it will just be the same thing. They look through the tariffs because they think they'll be a one-off. What will perhaps influence him, though, is if the economy continues to show some strength, particularly in the labor market. He's one of the people who dissented at almost every meeting last year, and he says this time that if the labor market data for February are consistent with the stronger job creation and low unemployment rate initially reported in January, it may be appropriate to hold the FOMC's policy rate at current levels. But he goes on to say that this could be just noise, what we saw in January. And if that's the case, if the good labor market news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that a 25 basis point reduction in the policy rate was appropriate, and that such a cut should be made at the March meeting. So we're putting a lot on that early February announcement of what the jobs rate will be in March. Yeah. And we do get a lot of other Fed officials speaking this week, so we'll get beyond Chris Waller, we'll get a lot of idea about where they all are after the January jobs report and after the president's trade decisions. Today, Chris Waller, and then tomorrow we get a host of speakers, including Goolsbee, Collins, Bostic, Waller again, Cook and Barkin, and more throughout the week. So the storm not slowing down the Fed, but we are continuing to wait and see in terms of what the ultimate outcomes will be at the March meeting.
Mike, before you run back to listen in on all of that, I'm just curious, how much discussion is there around AI disruption and what that means to employment and growth, to some of Fed Governor Waller's points?
There is a lot of discussion about that here. Chris Waller is going to give a speech on it tomorrow, he says, so we'll hear more from him on that. But the economists here are all trying to figure out what everybody's trying to figure out. When does it hit the economy? How much productivity does it create? And there are several sessions at this National Association for Business Economics meeting on AI and what might be coming next.
Michael McKee, thank you so much. And we look forward to reporting throughout the week on this conference and exactly what comes out of it, particularly the Fed speakers. Blerina Uruci of T. Rowe Price joins us now for more. Amid the swirl of uncertainty that we're seeing in markets, Blerina, thank you so much for being with us. I want to start with what's more important for you when you take a look at the economy and the economic trajectory for this year. Is it the tariff side of things? Is it the AI side of things? Or is it a consumer that's slowing down and potentially facing a pretty uneven labor market?
So never a dull moment with the U.S. economy. Just when we thought we had left tariff uncertainty behind us and we could look forward to some of those other factors that you mentioned to affect the outlook, now we're reintroducing that into the equation. So to be clear with you, I think there are many cross currents affecting the U.S. economy this year. We have this uneven labor market that you mentioned, a slowdown in the demand for workers. I think that's going to affect household incomes. To what extent that happens, I think will be also dependent on fiscal policy and the refunds that consumers are getting from the One Big Beautiful Bill exemptions and tax cuts that we saw last year. So I think in the first half of the year, we can expect the economy to be on solid footing, I would say. But I think bringing in this new tariff uncertainty does bring downside risks to my view about the U.S. economy. First of all, because now companies will have to deal with is there going to be a refund or not? How are we going to handle that? Do we need to file court cases individually? All of those things are resources that you don't spend on creating new business and demand. So I think that's important. Also, we don't know now what the new level of tariff will be. And that's another uncertainty that companies and consumers have to deal with. And what we learned last year is that uncertainty does affect small businesses more than larger businesses. And we were just seeing small businesses hiring demand pick up in late 2025. So I think it would be a shame to lose that momentum with this new policy uncertainty. So lots of cross currents here to navigate for the US economy, including will it be appropriate or not when you balance the risk to the labor market and inflation? Will it be appropriate to cut interest rates further this year?
Rita, there's a lot to pick through. I want to just parse one of the things that you said, which is that on the marches, this actually lowers your outlook for growth on the U.S. economy. I'm talking about the IEEPA ruling by the Supreme Court. Can you quantify that? Do you have a sense of how much? I mean, is it incremental, like 0.1% kind of hit to GDP, or is it something more substantial in the order of actually truly profoundly decreasing hiring?
I think uncertainty around this is high. It's still early days. We are not sure how the administration is going to precisely respond to this and how businesses will as well. But I would say that those downside risks are more modest. I don't think this is going to tip the U.S. economy into a downturn and that finely balanced labor market that we're have experienced. I don't think this is going to be enough to make it roll over and to get a spike in the unemployment rate. And I was listening to Governor Waller's remarks as well, and I agree with his view that what we saw in January in terms of a pickup, a pretty substantial pickup in hiring, I don't think that's going to be sustained for the rest of this year because we're still facing that lower break-even pace of employment. But I tend to disagree with him when you translate that to the unemployment rate. I don't think we're seeing signs that companies are going to engage in mass firing. You mentioned AI. I think there's going to be some productivity gains from AI, but not to the extent that they are completely transformative of the labor market in 2026. So the unemployment rate stays stable in my view. We just see a little bit more downside risk to that solid growth scenario that I had expected for 2026.
Well, what do you make of Governor Waller, though, saying that executives say significant job cuts are coming from AI? Isn't that only going to accelerate the better the models get?
I think so, but we haven't heard a timeline for when that might happen. And so based on what we know so far, my best case scenario is that could take 5 to 10 years to get those substantial productivity gains and to reduce employment. We're going to see in the first couple of years, I think, more of an effect on hiring of lower skilled or entry-level jobs. Sure, we'll see that, but I don't think it's going to transform the labor market and lead to a lot of hiring this year already.
So where do you think we're going to see the labor market continue to hold up? Is it just going to be healthcare jobs?
So we've seen that uneven equilibrium in the labor market, right? State and local healthcare jobs, government jobs for the last 3 years really driving employment. We are seeing tentative signs of more of a broadening in the labor market. So those are typically acyclical components of employment, and they don't tend to fluctuate too much with a business cycle. I think because we got that fiscal boost from the One Big Beautiful Bill, and because we got those interest rate cuts from the Fed and significant easing in financial conditions in the last 6 months or so, that we would see a broadening of employment and a pickup in cyclical demand for workers. Now, because we're dealing with labor hoarding post-pandemic and we're dealing with AI, I'm not expecting that we'll see a big boost in employment growth, but something in the range of 50K per month, I think it's possible for this year. And given that the break-even pace of employment has declined a lot, the labor force participation is not increasing anymore because we're not getting those migrant flows that we had post-pandemic, that should keep the unemployment rate stable in my view.
Blerina, just quickly here, as we look ahead to a number of different earnings from Lowe's, Home Depot, and a number of other retailers, in addition to, of course, NVIDIA on Wednesday, a real question about consumer spending and how much that can keep going. Why is the market not spooked by what Walmart had to say about the look forward, about a consumer that was flagging, sort of highlighting the K-shape and some of the concerns among consumer sentiment?
I think some of it has to do with the fact that the composition of aggregate in demand in the US, or aggregate consumer spending, is driven a lot by middle income and higher income households. And also part of it, I think, is to do with the refunding season that we're going to see for taxes this year that is going to benefit those lower end consumers more. And I think as inflation pressures stabilize, now, let's see what happens with tariffs. I don't think we're going to get price cuts because of nominal price rigidity, but we're going to get more stable inflation going forward. That should be helpful for real disposable income as well, and should benefit lower income households. So I think those are the factors that companies are looking at, and not taking a very pessimistic view on the U.S. household. Plus, let's not forget that the balance sheet of the U.S. household is in really good shape. There was a lot of cleaning up that happened post-pandemic, and I think that's going to be, I think, a key pillar, because the U.S. household can do leveraging very well, and it hasn't even started to get there in this process.
Blerina Uruci of T. Rowe Price, thank you so much for being with us. And we're just getting a note from Citigroup that I thought was really interesting from Andrew Hollenhorst saying, and this might be the reason why you're not seeing much more of a response in the bond space. The average global effective tariff rate appears to be little changed under the new regime, and we expect that the new global tariff, together with other new tariffs, will raise a similar amount of revenue.
All right, and that's what the administration told us. They had Plan B ready to go, and they're enacting Plan B right now. I think the bigger question is how much corporate America is going to get in terms of refunds. Or do they get refunds at all, or is that just an absolute wash for 2025?
Yeah, and do that just pocket that for profit, or do they pass it along to
big question.
The consumer? Meanwhile, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. More than 35 million people across the Northeast are under blizzard warnings as a winter storm brings heavy snow and strong winds. Some areas are expected to see as much as 28 inches of snow. 15 inches of snowfall has already been recorded in Central Park. Meanwhile, flight cancellations are piling up at the area's 3 main airports as they run on a modified schedule. NASA is preparing to remove its massive moon rocket from its launch pad to fix a technical issue. This putting on hold its much anticipated mission to send a crew of 4 astronauts around the moon. The agency had been targeting a March 6th launch for the Artemis 2 mission, but now says it won't happen until April at the earliest. And the U.S. Secret Service says an armed man was shot and killed after entering a secured area at President Trump's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. Investigators identified the suspect as 21-year-old Austin Tucker Martin of North Carolina. President Trump was in Washington at the time of the incident. That's Bloomberg Brief, Lisa.
Thank you so much, Yahira, and thank you for being here this morning. Up next, setting you up for the day ahead, plus John Vinh of KeyBanc Capital Markets previewing NVIDIA's earnings. That will come out on Wednesday. A lot of people looking, how much are they the main beneficiaries from the $650 billion of CapEx spending ahead? This is Bloomberg Surveillance.
The forecast that we view is still that the economy is doing well. The probability of going down the fairway and hitting up the rough has just changed quite dramatically. The tail risks of one of these things going wrong, either AI being widely successful or AI disappointing, could also be something that puts us into the rough.
That was Torsten Slok of Apollo talking about the toxic brew of uncertainty that seems to be hitting risk appetite. Adding to the uncertainty, what kind of economic hit the shutdown tied to the snow will be. We have been seeing whiteout conditions earlier. It is emergency conditions in New York City. Transit has been suspended. People are prohibited from traveling unless they absolutely have to. And it's been near whiteout conditions at a time when people are wondering exactly when economic conditions will start to reopen.
Yeah, we're basically locked into the city. It's absolutely insane. This live shot is kind of crazy about how bad the conditions are, and visibility seems to be getting worse. More than 10,000 flights into around the U.S. were canceled. So that includes Boston, Philadelphia, and New York. And as we heard from the ABC reporter earlier, usually this takes days to recoup in terms of the setback. And also, natural gas prices, futures are jumping right now. So it's going to be an expensive one when it comes to electricity bills, when it comes to heating.
Yeah, we'll keep you posted throughout the day as it does progress. Let's count you down to the opening bell. Here is a trading diary for the week ahead. 10 a.m. Eastern, durable goods. Tomorrow, we get Home Depot earnings, consumer confidence, plus President Trump delivering his State of the Union address. Watch this space. Wednesday, earnings from NVIDIA, the big one after all of those CapEx plans were announced by the big tech names earlier in the earnings season. Thursday, another round of jobless claims, and the U.S. and Iran set to resume nuclear talks. Looking ahead to NVIDIA earnings, the chipmaker set to report results on Wednesday in the next test for artificial intelligence. Vinh of KeyBanc maintaining an overweight rating on NVIDIA with a price target of $275, writing, "We expect increasing shipments of Blackwell to be a key driver of strong results and guidance." John joins us now for more. John, thank you so much for being with us. I want to start just with why NVIDIA hasn't been a bigger beneficiary, at least to the price action, on the backs of the $650 billion of capital expenditures announced by just 4 of the hyperscalers.
Yeah, I think, obviously a lot of concerns by investors these days that stock has underperformed this year. It's basically been flat. I think in the near term, it's just simply a function of positioning. I think a lot of investors beginning of the year had really been focused on the memory trade, right? You look at stocks like Micron, which is up 50% year to date. Obviously, that's been a huge topic because of the shortage issues. It's a huge enabler of AI and CapEx infrastructure spend. So I think, as memory has outperformed early in the year, I think a lot of investors are going to come back to kind of the leaders in AI. And I think NVIDIA is well poised to start outperforming the rest of the year.
They're going to have additional questions around geopolitics, global relations, especially after this tariff ruling. How do you see any kind of potential increase in tensions between the U.S. and China following the Supreme Court's IEEPA ruling? Any kind of additional uncertainty? Do you see that factoring into the earnings?
Yeah, I think China will continue to be a topic that investors kind of monitor very closely. I think in the near term, we have a resolution and an agreement with the U.S. government and China. I think they've allowed the shipments of H200 GPUs into the China market. We think there's going to be roughly about a $3.5 to $4 billion revenue contribution in the quarter. We think in the guidance, there's probably going to be another $2.5 to $3 billion of China revenue. So I think people are obviously going to continue to monitor it pretty closely. There is a process right now. There is approval to allow the shipments of prior generation GPUs into the China market, and I think that's kind of what people are going to be watching now.
John, do you expect that the president's trip to China could change the policy specifically when it comes to NVIDIA?
I don't see any sort of drastic near-term changes, right? I think China is an important market. I think we are better off allowing shipments to China versus not allowing shipments to China, which would then, fuel further investment in R&D on the China front and potentially allow them to develop their own AI chip solution. And then at that point, we have no idea what their policy and their strategy is at that point in time. And I think the chip makers in the U.S., I think, have been lobbying and working with President Trump pretty closely to kind of get to the policy that we are where we are today.
What about the appetite on the Chinese side? Do you see Beijing continuing to want to buy NVIDIA's chips, most notably the H200s?
I think that appetite will continue. Obviously, out of China, there has been a lot of rumblings that the China government is capping shipments of H200 GPUs from NVIDIA, and they're really pushing their local hyperscalers to buy domestic solutions. But the reality is there is such a wide performance gap that really they really have no choice at this point but to kind of lean on NVIDIA and U.S. technology.
John, are we going to find out more about Jensen Huang and Sam Altman and what their relationship really looks like?
I don't think we'll see anything other than kind of just a reiteration of the commitment between OpenAI and NVIDIA. Similarly to China, we think OpenAI is developing their own AI ASICs like other hyperscalers are. But at this point in time, other than Google's GPU, there is nothing out there in the marketplace that is competitive to the GPUs that NVIDIA produces. So I think at this point in time and for the foreseeable future, OpenAI and NVIDIA are heavily codependent upon each other.
John Vinh of KeyBanc Capital Markets, thank you so much for being with us. Stay safe as the weather does pose some significant challenges. I will just say, did you see Sam Altman's comments over the weekend?
I did.
About energy?
They were pretty weird.
Humans need energy too. He was trying to push back against this question around how much energy usage AI would...
You have to feed humans,
as well
you have to warm
you've
humans.
You've got to water them as well.
So why don't we just put all that energy we're putting towards humans to putting it towards an AI robot? That was the sense I got.
Well, there is this interesting dual approach from Darryl of Anthropic versus Sam Altman of ChatGPT, and a question, or OpenAI rather, a question of how do you push back against what could be rising animus, especially given the fact and given the concern that people have about what this will do to the jobs picture.
Well, Anthropic is pushing back when it comes to how the U.S. government is using their Claude approach. And actually, Axios has a story that Pete Hegseth, the defense secretary, will be sitting down with the Anthropic CEO tomorrow. Potentially, if Anthropic continues to push back about how their AI tools are used by the military, that might mean that that tool might not be used anymore in the military. They may no longer be a customer. So there's a lot of big stories taking place right now, live discussions about how AI is being used, at least when it comes to the defense sector.
Yeah, and how much say some of these CEOs have over how their technology will be deployed when used by certain players. Right now, you are seeing that risk-off feel. Will it last throughout the day? Coming up tomorrow, we'll parse through it all with Cameron Dawson of New Age Wealth, Bob Michael of JPMorgan, Libby Cantrell of PIMCO, and Kate Moore of Citi. From New York, this was Bloomberg Surveillance. Please stay safe out there throughout the day.